level. HG Infra, this stock was gaining quite considerably even in the pre-open session. It's building on that now at the high point of the day, up over 9% on account of that 400 crore order. And there's also a lock-in ending for a number of stocks. So you could see a little bit of volatility, not too much actually, if you think about it. Wakefit as well as Corona Remedies and Amanta Healthcare not doing too much on account of the lock-in ending for these stocks. But Hiral, are you spotting anything else? And there are quite a few stocks that are moving on account of the government schemes and the improvement that is foreseen there.
Yeah, I think apart from the Jal Jeevan Mission stocks, few of the other things I want to highlight is, let's just pull up a TTK Prestige on the screens now. The reason I think why this stock is up in trade is probably because of the fears of cuts in terms of cooking gas, and you're seeing sale of inductions that are probably picking up. That stock is up nearly 8 to 9% in trade. We'll talk about that one as well. But apart from this, a few of the other names that we should be looking at is the entire IT pack, which is in focus as well. Electrosteel Castings is seeing a strong up move in today's day of trade, so watch out for that counter pretty closely. Shakti Pumps we've already spoken about. Jindal Saw is another one which is seeing some smart moves in trade today. And on the losing end, Reddington is slightly under pressure. You have SJS also, which is down in trade. TTK Prestige is what I want to talk about. Parag bhai, any view on TTK Prestige? Because always we've spoken about valuations which have been extremely cheap,
high, yeah.
but the stock has done really well.
So company is good. There is no problem with the company. I have not looked at it very closely as of now, but I would say that if this is the reason that it is going up, it will be a temporary thing.
In fact, to add to that, we should just look at a StoveKraft as well. Let's see what a StoveKraft is doing in trade, because if it's induction, then probably it's both these counters. There you go. Both the counters seeing gains in that range of around 5 to 10% in trade. Any momentum on the charts, Kush?
No, not really. I mean, yes, there is some traction on StoveKraft, I would say, compared to at least TTK structurally. There is a break of the 20-day moving average and a falling trend line. So if you have a position, I would suggest a hold rather than a fresh buy. Stop loss at the 495 mark and targets 525 and about 545. But yeah, this should be a quick in and out kind of a trade, not something that I would hold positionally.
Just to say that I know we're completely scoffing at this shortage of LPG cylinders right now. It's taken less than a week of Qatar stopping LNG supplies and less than 10 days of the Strait of Hormuz being shut for us to be in a situation where all major companies have to reprioritize the supply of cylinders to educational institutions, hospitals and houses.
Absolutely.
We are more insecure than it seems. We need to do something about it. So that is for sure. And I won't be surprised if people say, "Arey, ek induction stove leke rakh lete na, kya hota hai?"
Exactly.
Yeah, that's what's happening for sure. Okay. Any thoughts there? Because we also had a view that when this ends, and it will end very quickly, HPCL, BPCL, IOC will be ones to look at, because the government will move to shore up these resources.
No, I complete. So first of all, this entire episode of West Asia turmoil has opened us to this huge insecurity of energy. And so I feel that the longer term trend, if you see, I think government will move towards encouraging more and more ethanol blending, more and more EV kind of thing. At least on the auto side, I'm saying. And of course, they'll try to diversify the alternative resources of energy, because here we are completely dependent and exposed. So we have to do something about it.
I think that's going to be the name of the game.
Yes.
Thank you so much, Parag Thakkar, Kush Bora and Chandan Taparia for joining us this morning on this leg of the conversation. Nandan Chakravarti, Head Research Strategy at DAM Capital Advisor, is joining in this morning as well. Nandan, very good morning to you and great to have you on India Market Open. Superb to speak with you. Is this a shopper's market right now?
See, it completely depends on your strategy. So because a war can never be forecast. People thought that the Ukraine war would be one week. People thought that the Sindoor operations, Sindoor could be 1 week. So I think there's no clear answer to that. I think what is important is to figure out not how long the war will last, but where are the points of disconnect, and to see that in your portfolio, the points of disconnect are not there. Number two, what are the points to monitor?
Nandan, hi, good morning. Alex here. So, when I look at your note, you have started by looking at the macro picture, right? And in this kind of a market, when there is so much that you can't predict, as you've pointed out, there are a few things that you should keep a bearing on. And you've highlighted the INR depreciation, you've highlighted monetary policy, both in the US as well as back home. So how, according to you, and we'll delve a little into the micros after we deal with this and we ask you about this, but what direction do you see these macros taking and what are the implications for stocks?
So I think the most important thing is to monitor three things at this point in time. See, there are two routes. One is the Red Sea route. That is the route for us to both export and import to Europe and to the US. That's open as of now. That means the fertilizers from Russia can come to us. Similarly, our gems, jewelry, your textiles, engineering goods can go to Europe and America through. So that is not at risk. So the first thing to monitor is whether the Houthis will start troubling the Red Sea or not. Because then fertilizers will become a problem. Fertilizers from Russia. The second thing to monitor is what happens to the Hormuz Strait in terms of the small boats, because the larger boats, America can take care of, Chinese can take care of, but all the small boats lying all over there, that's a problem. And therefore, if Trump's reinsurance policies, what they land up in. The third thing is, as we said in our report, is the OPEC response to oil, that is oil supply as well as oil price. So OPEC response, which sort of vessels are being allowed in, and the third within that subcategory is the strategic reserves. So I think these are the three main things to monitor rather than try to forecast what will happen in the macro.
So let's talk about some of those micro factors as well, because you are looking at gainers and you highlighted those, right? You've talked about IT and pharma exporters. You've spoken about shipping on account of freight rate spikes. You've spoken about defense, and you've spoken about upstream oil. And of course, the latest development with a very large company in the energy space with regard to investments made in the US. How do you see all of these developments take place?
See, so what I gave was a list of gainers, and below that I've given a whole list of losers. But what is important?
I'm focusing on the gainers, Nandan.
Is the second part is the gainers and the losers have more or less done whatever they had to do in the last few days, because this is not the first day of the war. So that's not as important now. What is important now is to figure four things. One is which stocks have been over discounted or under discounted so far among the gainers and the losers. So to give you an example, for example, the large private sector banks, obviously the first to have lost money, because that's the first thing people will sell. So I think they have, overcorrected. Just as an example. Similarly, when you think of IT versus pharma, well, IT is a very short-term thing. We don't know still what will happen to AI productivity and stuff like that. So there, I would rather take, as my analyst Anmol Garg, he just released a report. He says by the second level, the mid-cap IT rather than the large-cap IT. Though both have corrected and both are sort of safe at this point in time, not undervalued but fine. So the smaller the mid cap IT is the space where there can be much less damage from AI rather than the larger ones. So first thing is over versus under discount. Another example is, for example, the upstream versus the OMCs. The OMCs should have got hurt, but they're still at a reasonable valuation. So why should you buy them at this point in time? So that's the first thing. Number two is who can pass on the cost increases and who can't. For example, a large FMCG player will be easily able to, pass on plastic and packaging costs. And therefore their market share should increase. Similarly, a plastics company, immediately they hike prices. So who can pass on versus not? The third is margins versus volumes. So, if there's a shortage in something and you have it and others don't, then your margins increase. But that depends on whether you have the volume or not. So here specifically, I'm talking about, some of these gas companies, not LPG, on the LNG side and so on. The fourth thing is, just as things happen on the financial front and what you see in the news, there are also things which are happening at a subliminal level. For example, government is taking out regulations, your US, etc., taking out your strategic reserves. So you have to see what is not in the news and happening. As an example of that, in terms of regulations also, remember that this year there will be two major elections. Tamil Nadu and West Bengal, and there are a few other, Pondicherry and so on, Assam, some of the smaller ones. So the government is also sort of has his hands bound in some of them. So I think these are the 4 or 5 main considerations, rather than taking a list of gainers and losers some 6-7 days after the war is already started.
Where would defense fall? Nandan, good morning. Tamanna here. Where would defense fall in these list of considerations as longer term policy move after something like this has happened? Fairly close to us, we've seen the impact as a nation. And I would add to some extent even OMCs in that, because we've seen the choke on gas availability fairly quickly, worryingly quickly in everyday lives. So OMCs, defense, how would you see these as impact that would continue for the next few months?
So in our report, right on the first page, we made a small little table which says crude, LNG and LPG as the 3 columns. And the rows are how much is the import dependency. Of that import dependency, how much is through Hormuz Strait, and the third is storage capacity. It's a very simple table. So I'm saying the only one which was really vulnerable was LPG. It was very clear from that. So on OMCs particularly, they haven't fallen enough. So we'll have to, as I said, unless prices fall enough, you cannot buy, irrespective of whether it's a gainer or loser. Now, defense is a very complicated thing. I can only say Jai Hind right now, because, the radars have got screwed. Some of the biggest radars in the world in the Middle East, and some of them take 5 years to rebuild. That has been borne by Iran. And you know what happened in Operation Sindoor. So Jai Hind again to us. What I'm specifically saying is that in defense, whether it is naval, for example, the Chinese have just alarmed us by having plans to increase their fleet, I think by 20%, I'm not sure, even though they are one of the largest fleets in the world. You have air defense, which is going to be one of the most important things going forward. Then you have, drone technology. So almost everything, whether it's land, air, sea, will see a huge boost as far as defense is concerned. Only thing that the government knows that some of the large players, I can't name them on this thing, but some of the large government players don't have enough capacity.
So execution is a concern.
Private sector ones in. And that's the ones to look at.
Okay, so execution is a concern, so look at specifics there. Nandan, quickly, Hiral on this side. Now, broader markets, in terms of valuations, if you have to look at the mid caps and the small caps, you did mention IT, it's the mid caps that are favored.
Previous quarter has started growing in both, has grown in both the domestic side. Previous quarter has started growing in both, has grown in both the domestic side as well as the Middle East side, the exports. So private capex, I think, is a good thing. Overall, auto is still continuing to freak out, even though GST cut has been almost now 5 months. It's still going. The worry is whether the drop in IT will decrease discretionary consumption in India. However, things like Eternal, Swiggy, etc., those parts, auto, a lot of the consumer discretionary still remains strong. So overall, I think don't get into the trap of moving from growth stocks to value stocks.
The trap with regards to growth stocks to value stocks, that is something that you should... Yes, don't get into it.
Yeah, remain with growth stocks at reasonable valuations.
Right.
Don't go into this thing. India is a country where, unfortunately, unlike the West, we go for ROC rather than growth.
So look at growth, Nandan. I think that's the clear message coming in. But thank you so much for joining. It's always a pleasure to speak to you. A growth versus value discussion, always encouraged and always appreciated by viewers as well. So that's the story when you're talking about the Indian markets. But one stock that we need to look at is RK Forgings. Now they're looking to consolidate their market position, and this is by commissioning their new press line in Jharkhand. And now this new installation marks a major step when you talk about the company's ongoing strategy to expand capacity, enhance technological capabilities as well. Let me get in Puneet here to tell us more in terms of what's happening with RK Forgings and what should be the key talking points with the management. Puneet, over to you.
Well, thank you for that. Definitely the three key talking points. The one, as you rightly mentioned, a new press line that has increased the capacity of the company to over 3.11 lakh tons. And essentially what would be the utilization, the revenue contribution, if any, the company could give in FY27 will be one key talking point. The other bigger talking point has been the revival in the growth of the Class 8 truck sales, especially in the month of January as well as in February. The growth has been over 100% on a YY basis, and given of course the low base, but if this continues, it would be a big positive for the forging companies. And if does RK Forging benefit from that, that'll be the second key question. The third one will largely be if the Q3 revenue fall of almost 27% in the export revenue specifically is the base. Now, is the momentum only upwards from here? Those will be the three key talking points from this conversation that I'll be watching out for.
Okay, thank you, Puneet, for that. In fact, let's get in Lalit Kumar Khaitan, ED and CFO at RK Forgings. Welcome to the show, Lalit. Always a pleasure to speak to you as well. This is Hira on this side. My question coming to you is the new forging press line, what are the kind of, additions that you're seeing in terms of initial utilization levels, the quantum it will add to your top line and bottom line?
Yeah, thank you. So coming straight to this forging line, 8,000 ton press line, which we have commissioned recently, considering the current demand scenario, the ramp up will be very fast, and we are looking to utilize almost 75% of capacity in next financial year only.
Okay, so 75% capacity addition in FY27. How much of revenue addition and bottom line addition that you will see out of this line?
So I can certainly say if we are going to make about 75% capacity utilization, it will be more than northward 500 crore of revenue only from this press line. And bottom line is really difficult to comment because it's a mix of lot of things. So I will not like to comment on the bottom line specific to this line, but overall certainly bottom line is going to improve.
And with regards to where 500 crores upwards is the kind of revenue addition that you're seeing at 73%, by when do you see 100% utilization? Yeah,
so certainly, see, any capacity doesn't have the 100% capacity utilization. You can reach about optimum 90-95% capacity utilization. That can certainly happen in FY28.
Khaitan, very good morning. Tamanna here. Just want to understand about the kind of demand coming in for Class 8 trucks. That's the heaviest category of heavy duty category of trucks in the United States. And of course, those numbers have surged in Feb. Are you seeing some impact of that? Are you seeing any improvement in requirements coming your way?
You see, certainly there is an improvement requirement, and that is happening much before this February Class 8 requirement. I think we have started seeing this green shoot late December or early January. And certainly it's a good sign to have this kind of Class 8 demand, and it will improve overall exports, no doubt about that.
Because your export realization is actually reduced a bit. To what extent, can you quantify for us the kind of requirements coming in? How will it improve your exports? Can you give us a little more detail, Mr. Khaitan?
See, it was certainly led by only tariff uncertainty. Whatever you have seen the reduction in export sales, that was due to tariff uncertainty. And we were seeing the improvement in this, and with the trade deal, we were hoping for quite a great improvement in the export demand. However, due to, again, this war with Iran, I think a little bit uncertainty has again come up. But in the medium term, it looks quite good, and the exports are bound to improve.
So a couple of things there, sir, because you said the reduction in realization of exports is because of tariff uncertainty. That uncertainty in some sense closed in February this year for India. You're seeing demand started going up from December. So they seem to be two different things. What is that demand being driven by, and what is the impact you have seen? Any quantifiable increase in orders that you have seen?
See, it's very difficult to say quantifiable increase in order, but there are, because see, it depends upon schedules, and the schedules has improved from my OEMs. And whatever, if you want to see the improvement in demand, basically earlier, due to the tariff situation, inventory was being tapered. And once inventory is down, certainly demand will come up. That's the reason the demand has started coming up. And certainly, and that's why we are seeing overall improvement. And tariff situation, the trade deal only helped the situation. And coming to the realization, a lot depends upon the product mix, what we supply. And once the mix improves, the certainly realization also improves.
Okay, just on the second part, Mr. Khaitan, you mentioned that the Iran war has now again created uncertainty. Is there the import costs going up, or the fact that, are there materials stuck for you because of what's happening in Strait of Hormuz? Are you seeing your exports also going down? What is the exact impact of the Iran war as far as you are concerned?
So as far as we are concerned, we are not impacted so far. And our shipments also are not impacted, because I don't think we use that line. And I am just foreseeing, because again it creates uncertainty, which may result uncertainty in future. Right now, nothing has got impacted.
Use that line. What is the route then you use? Because right now all of us are, trying to figure out how the impact is. The sense is everything is coming through Strait of Hormuz. Why are you not impacted by this?
No, so I think I don't have exactly the route, but there are a lot of routes which are not impacted, and I think that's the reason I think shipments is not impacted yet.
Okay. My question to you then is, overall, if you have to look at the line, the new forging line is that you've already mentioned, your automotive exports is something that you're looking to reduce and increase the non-automotive side of the business as well. 6,000 crores is what you've guided for in terms of top line for FY26. Are you on track on that aspect, or are you seeing any deviations come in?
No, certainly that's the endeavor of the company, to increase its mix of auto and non-auto. It doesn't mean auto will reduce. Auto will reduce in terms of overall percentage, but in absolute terms, auto will also increase and non-auto will also increase. And we are on track to achieve our auto non-auto mix target.
Okay, so achieving the target mix is something which is on track. 6,000 crores by FY26 is something that Street should be watching out for. But thank you so much for joining in. Always a pleasure to speak to you and get insights. So that's the management of RK Forgings. The stock actually has spiked to the day's highest levels as the management speaks to NDTV Profit, and the new line will garner revenues upwards of 500 odd crores from FY27 onwards, and this is at 75% capacity utilization, with an increase coming in terms of the bottom line as well. So that's what the management has indicated to us. But moving on, the US-Iran conflict is putting fresh pressure on global LNG flows, with the markets closely tracking the potential disruptions in key shipping routes. Now, before we speak to the management of StoveKraft on how these LNG rises could impact the company, Mahima joins us with a broader context. Mahima, the stock is at the day's highest levels, and somewhere this company becomes a beneficiary, right?
Basically, what happens is that the company is in production of electric stoves as well as stoves that use LNG. But the idea here is that one needs to we want to understand as to how this will impact positively or negatively for the company. Now we've seen that the fears for shortages of LPG as well as LNG has been there across India, and there are supply cuts as well. Although the government has said that there are no crisis and there is no single distributor to it, but we'll have to see as to how this has ripple effect on different sectors. This is of course with regards to the first talking point, but the second one, with regards to how Q3 has has fared. A lot of brokerages remain positive on this particular counter. Q3 overall revenue growth was very good at the 13% mark. Overall, PAT beat was also due to lower than anticipated interest as well as tax rates. And exports for this company have been doing very well, and the partnership with IKEA is also faring very well for the company. Overall, non-stick cookware has grown at the rate of 16%, and cookers have slightly reported a slower growth. But guidance has been maintained by the company at a 15% revenue growth for FY26. So this is the overall view, and of course, a view on how this entire shortage will impact the company is something that we need to decode.
Yeah, so quite the number of talking points that we have to take with Rajendra Gandhi, who is the managing director of StoveKraft Limited, joining us this morning. Mr. Gandhi, thanks so much for taking the time, and pleasure speaking with you. And of course, one hopes, all of us do, that this crisis is short-lived. But the tendency is that it can have unforeseen or outcomes. And one of them would be possibly a higher demand for induction. Are you seeing increased sales or increased inquiries at the very least?
Yeah, good morning. Yeah, every one of us will want a stable arrangement across the world, and that's what we wish and hope for. And, current challenging times has also given, more challenges to the thoughts of domestic households. There is definitely a huge surge in consumption of electric stoves, both induction and infrared cooktops. While we manufacture LPG stoves also, but in the category of induction cooktop, we are seeing very high surge in consumption.
Quantify that, sir. And is this something that you've seen over the last week and a half?
Yeah, it's in the recent times. As it is, we are leaders in this category, but we are seeing very high buying pattern, both on online and offline channels on the induction cooktop.
Sir, can you please help us understand what this number is? If you can quantify it, even if you talk about percentage terms, what is the kind of increase if you compare it with the last quarter, etc.?
So we call this DRR, daily run rate. So what we can actually measure, particularly on the online channels, we are able to get real-time data. There is in the last 1 week, we are seeing 3x kind of surge in the induction cooktop category.
Do you have capacity, Mr. Gandhi, to take care of the output that is required here?
We are addressing, we are well capitalized, but as we move forward with the same kind of demand, there is also challenges on the supply side. There is a huge cost pressure on various inputs. We are addressing that. We have capability to ramp up, but it may not be to that extent of 3-4x currently what we are seeing. But I think this will stabilize. We are, as it is, leaders in this category. We see good growth happening in this in the coming months if the unfortunate situation continues.
Okay, Mr. Gandhi, good morning. Hiralia, you've mentioned that there is pressure coming in on the supply side. Where is the pressure coming in from, number one, if you could explain to the viewers and investors? And two, because of the pressures, are you seeing an increase in terms of costs as well?
Yeah, definitely there is a pressure on all metals, but particularly since we were discussing induction cooktop, there are a lot of imported components that we import from China, particularly the electronics. There is a strengthening of the RMB, and there is a sea freight disruption already. So there is a definitely cost input pressure on the imported components, but not limited to that. There is also a plastic part. There are several plastic parts in the manufacture of an induction cooktop. There is both demand side instability and price rise in the plastic components. So on the cost, definitely there is an increase. We'll have to definitely pass it on to the consumer, but it cannot happen in real time. So there could be a lag, and that could definitely impact our gross margins.
Okay, so Mr. Gandhi, by how much do you see a price hike coming in, number one? And if a lag, would this be in the first quarter of FY27?
No, the first quarter, the price will get corrected. Every
Okay.
quarter, we correct our prices. But for this month, definitely, we see that impact. It is not only limited to induction cooktop, all metals, and because of Forex appreciation on both these counts, there is definitely a price impact on the cost. We pass on every quarter, we correct our prices. So for the first quarter, we don't see a challenge. Definitely, there is a challenge in the gross margins in the current quarter. It could impact by between 1 to 2% of our gross margin.
Oh, okay. But I just want to understand. So therefore, if you're likely, at least in the near term, Mr. Gandhi, to see a shift in the mix of product that you're selling, on the one hand, you're likely to see a spurt in revenue. So are you going to be changing your near-term guidance at the very least? And two, because of that change in mix and the pressure on the supply or imports, what is the impact on the margins?
On the absolute number, we will grow. Only on percentage terms on gross margin, there could be a drop in the current quarter. But otherwise, we are seeing very high growth on revenue in this quarter, as it is even before the impact of this induction cooktop. We are witnessing good growth on the revenue front. So absolute number will grow, but in terms of margin, on the gross margin, there could be an impact of about a percentage.
Just want to reiterate, 15% you're going to hit. Are you going to do better than 15% run rate on revenue?
No, we were not at that revenue growth run rate for the first 9 months, but we will be better than, definitely a double-digit growth we are confident of.
Okay. All right. Mr. Gandhi, thanks so much for taking the time. Pleasure speaking with you as always. Right, now, we spoke about some of these stocks. Jal Jeevan Mission gets 2028 extension. Let's go across to Sharad to tell us what companies stand to benefit and what the implications are. Quite a few of these, Sharad, are doing particularly well in trade today.
Well, Alex, if you look at the entire water, EPC, infra theme, and also a lot of pipe-related companies and solar pump-related companies, all of them are doing well in the trade today. Interestingly, this extension has come in, and this is roughly 8.7 lakh crore rupees. This is, of course, an enhanced financial outlay would be coming in, the platform, the initiatives, but the street is really liking the stock reactions, how things are actually panning out. Let's just mark these important stocks for pipes and fittings: Astral, Supreme, Finolex Industries and Prince Pipes. These are the stocks which would gain the most. But the EPC players, Vatek Wabag, EMS, Ion Exchange, and even Thermax to a certain extent are having a good exposure in this overall setup. Regarding the pumps and valve segment is very much important because there's a much more requirement coming in, and the KSB, Kirloskar Brothers, Shakti Pumps, Josh Engineering, and even Oswal Pumps in the mid-cap, small-cap space are buzzing in trade where a good move has happened. Amongst the smaller players, we have Enviro Infra, Concord Infra, and Denta Water also. That's where the good up move is coming in. And remember, one concern is definitely there in the industry. In the first session, or you could say Jal Jeevan Mission, there was issues of increased receivables, which we have seen in most of the companies which you would be focusing on. But overall, the underperformance has been there. But now, if the second scheme comes up, we can see a good up move coming in the coming days.
Okay, thank you so much for that, Sharad. Vinayak Chatterjee, co-founder and managing trustee of the InfraVision Foundation, joining in. You can't think of a better voice when you want to talk about infrastructure and the impact it will have on India. We've already seen the stocks up, so that one part we have covered well. Vinayak, thank you so much for your time to us this morning. Just the fact that this mission, which seemed to have taken a bit of a pause, has been brought back center stage. How important do you think this is in the picture and the imperative need to make sure that we manage water portability in a more sensible manner?
Good question. You know, when it was first announced that India would, after all these years, after independence, finally give 24/7 potable drinking water to 19 crore rural households, it evoked very, very positive response and was probably one of the key Aam Aadmi deliverables after, electricity and LPG and stuff like that and rural roads. Unfortunately, while the scheme was very comprehensively crafted, the results on the ground were mixed. There are parts of India, including remote areas, where villagers have been delighted to suddenly see water in their homes, and they have been well captured in various videos and media deliveries. But there are large sections where the implementation has left a lot to be desired in terms of, the equipment has been laid or partly laid, but water is still to reach. Sometimes it is not of quality. Sometimes it does not have the right pressure. Sometimes it is just doesn't come at all. It's not 24/7. So there have been huge issues at the village and ground level. So the government has done well to take a pause and say, okay, we've learned a few lessons. What do we do? And the 2 or 3 major things that I have learned in the last few days as to how the mission is being reset is, one, it is hugely being targeted towards direct, shall we say, reaching the funds at the village level itself with the ownership of a specially constituted village panchayat kind of committee that will oversee the operations, maintenance, and the capex of these projects. So it tends to bypass the state governments, which themselves have led to a lot of issues on, inappropriate use of funds, etc., etc.
Sure.
That's one major reset. The other reset is that the funds released are going to be based on proof of outcome of delivery. Now, while I just heard your stock market analyst talking about how good it is for everybody, obviously it is very good for equipment suppliers who get paid by the EPC contractors. But for the EPC contractors, the jury is still out as to whether they will get their payments on time or they will still have to run from pillar to post in utter frustration to get their receivables, as has been the case in the phase 1. But over to you.
No, but so I would say choke in the actual execution is always where the challenge lies, Mr. Chatterjee, and that's what we've seen. Hopefully it will not be the case this time. I just wanted to understand the second order impact of a scheme like this. Of course, clean water, potable water is there, but economically lifting those areas once this mission actually comes into place, that is something we don't immediately calculate usually, isn't it?
It's true. Actually, the biggest impact is in women empowerment.
Yeah.
Rural women today spend a disproportionate amount of their time gathering and storing water. So that itself is going to lead to a high increase in the productivity of women being able to engage themselves in many other kinds of productive work, non-agricultural, crafts, and various other kinds of activities. The second will be in the issue of health. It should lead to a spike in the huge improvement in the quality of health of the large sections of our brothers and sisters who live in the remote parts of the country, who suffer from a variety of ailments that are linked to water. These are 2 that I can think of straight away. I'm sure there are more.
Absolutely. Vinay Chatterjee, thank you so much for coming in and speaking in detail and with such clarity on the importance of this mission. Of course, we're seeing the stocks react, but important to understand what the impact will be even on a longer term. We'll take a very short break. Quick look at markets before we get into that break. And, the Nifty dipping a bit from the start. So a little bit of a pay. They're not at this lowest part of the day, but cooling off to some extent. So is the Bank Nifty and the Nifty IT. So that cautious range-bound trade continues definitely. You have some pops of green. So your induction stove makers, your Jal Jeevan mission beneficiaries, all of that is happening. Indigo is still holding strong, but overall sentiment a little cautious, and it would be because there's no clarity on what's happening in the West Asia crisis. That's what we're going to talk about after this very short break. At 10 a.m. every morning, we're speaking to top geopolitical experts to help us make sense of what's happening in the world right now. On the other side, we'll be in conversation with Zainab Malkuti to discuss whether there are any potential de-escalation attempts.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, number one on YouTube. NDTV Network, streaming India's trust, leading India's conversations. The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
Where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक।
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
It's okay यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5.
Welcome back. You're watching India Market Open. This is a segment that we're doing all through the West Asia crisis, speaking to experts to try and help make sense of what's happening and what could happen next. Dr. Zainab Malakouti is joining us now from Singapore. She's Senior Fellow at the Global Peace Institute and Research Affiliate to the Middle East Institute at the National University of Singapore. Dr. Malakouti, thank you so much for speaking with us this morning. I want to start by talking about whether we are actually seeing an easing of hostilities right now, or is this a momentary pause before the next leg? Because we've seen crude prices come off. Is that indicative of some kind of relief?
First of all, thank you for having me. As you probably know, the war started on 28th February 2026, and for now I can't see any sign of de-escalation of this war between Iran and Israeli and US militaries.
Okay, specifically though, and you've spoken about the fact that there is nuclear capability, and if this the de-escalation does not come to pass, then there is something to worry about here. But explain things from your perspective, and the fact that there has already been the use of trade and the weaponization of trade in the run-up to this crisis as we see it right now, and the militarization of the crisis. But even before that, for months and years, there was the weaponization of trade that was taking place.
Yes, as you probably know, Iran and the US was in the negotiations in terms of, and specifically for nuclear program of Iran. And in the 12-day war that started in June 2025, Israel and the US launched surprise attacks on Iranian nuclear and military facilities. And after that, the President Trump had even stated that Iran's nuclear program was obliterated. And also this time they were again in the middle of negotiations, Iran and the US, and again in the middle of the negotiations, the Israeli and US launched another attack on Iran. In terms of the future and the nuclear weapon program of Iran. So there are some challenging issues that with the new supreme leader of Iran, Mujtaba Khamenei, so there is a possibility for Iran to go toward the nuclear weapons. But at this stage, we don't know exactly about the new supreme leader of Iran's opinion, specifically political opinions.
Okay. Dr. Malakuti, just trying to understand this new aspect that has come into focus after the US President Donald Trump has been posting about it, that they are now attacking mine layer boats from Iran, and claiming that Iran wants to lay mines in the Strait of Hormuz. Is there any precedent to this? Can you explain to us what would be the impact of this kind of an action? And this would definitely extend the closure of the Strait of Hormuz, wouldn't it?
Yes, you are completely right. Since the US-Israeli launch attack on Iran about a week ago, so maritime traffic through the Strait of Hormuz has almost come to a standstill. This disruption have global consequences, affecting regions from Europe to China and South Asia. Because around 20% of the world's oil and gas passes through the Strait of Hormuz, as making it one of the most important energy routes in the world. Following the attack on Iran, the IRGC stated that any vessel attempting to pass through the Strait of Hormuz could be attacked. And so far, as we know, 9 ships have been attacked. So this route is very important for oil and gas routes. It's a very important route for oil and gas into the whole world.
Dr. Malakuti, just trying to understand, where do you see crude prices going off? We are now below 90. If things continue as is, there are some estimates which say that crude could go to 200. Do you see that possibly happening, or do you see crude remaining in this range?
I think that it depends on the following days to see that what's going on between Iran and the US and Israel attacks. But what I can say is that the rise of oil price is a good strategy for Iran in order to make a pressure to stop the war. So probably Iran will do something to raise the oil price in the future.
Thank you so much, Dr. Zainab Malakuti, for speaking with us and just giving us a sense of where crude prices could go. I mean, the long and short of it is, we don't know. We'll have to wait and see how things pan out over the next few days. But keeping the superb conversations going this morning on India Market Open, we have with us Mahesh Nandurkar. He's Head of Research and MD Jefferies India. Mahesh, always a pleasure to have you on. Do you see any opportunity in the Indian market, and are you focusing more on the ex-energy basket and the other stocks apart from the ones that are impacted very directly with the crude price instability?
Yeah, thank you for having me here. Always a pleasure from my side as well. So outside the energy basket, I think there are a few sectors and certain sort of stocks which are looking interesting. In fact, we're calling India now a bottom-up market because the top-down story is not as compelling, especially on a relative return basis from a foreign investment point of view. So we basically calling it as a bottom-up market. And yes, there are certain opportunities. So one segment that we feel very strongly about is the power and utility space. That's one sector that looks pretty good. From a risk reward perspective, I would say a smallish sector, but even real estate looks pretty good, as well. Banks, that's the other one. So I would say that these are some of the sectors that are looking interesting even today. But I mean, if one takes a slightly, longer term view, maybe like 6 months or actually maybe more like a 1 year kind of a view, then I think it makes sense to assume that the war and the war-related disruptions will not go on forever, and for the investors who can stomach some near-term volatility, I think there are more segments that are looking interesting, even even at today's price, I would say with a 1 year view.
That's a very positive outlook, Mahesh, at a time of extreme uncertainty. Just want to come on banks, because this is something I'm hearing from more than one quarter, that banks look good, banks look stable, but it's just not showing on the screen. We're seeing continuous uncertainty on banks and knockdown on some of the largest names. Why do you think that fear is? Is this just money reshuffling?
See, I think the entire market is in the grip of fear at this point in time, right? And for the right reasons also. One cannot really ignore the global geopolitical developments, which obviously have definitely negative impact, not just in the real sense, in terms of the way it impacts the near-term EPS numbers and the profit numbers, etc., but also from the investor sentiment point of view as well, because the investors will ultimately need to attribute a higher equity risk premium to all the global equities, and that's what we're seeing happening in India, but elsewhere in the region, as well. So that is impacting the broader markets, and that is impacting the largest macro segment in the market, which is banks. But I feel that banks are sitting quite pretty on multiple positives. The single biggest positive is the credit growth outlook. So as almost 1 year or so ago, back in like May or June of last year, the credit growth had slumped to almost like 9%. Now we are comfortably in the 13% plus zone. So already a 4 percentage point increase. And this is despite the fact that at the current level, the overall inflation or the overall GDP deflator is still at a very, very low level. As we go forward a few months, I'm quite certain that inflation would be trending up. I mean, obviously, what is happening with the oil prices is just one, but more temporary reason. But there are other reasons as well. And as you know, RBI's own CPI forecast is about 4% for FY27. So as the inflation goes up, so will the nominal GDP growth numbers, and so will be the credit growth number as well. So that's one on the credit side. The second point is on the margins outlook, the net interest margin for the banks, which have been under pressure for the last 12 months because the RBI cutting rates by almost 125 basis points over the last 12 to 18 months or so. But now the rate cuts clearly seem to be behind. So the margin pressure is behind. So that's the second reason. The third is on the asset quality. Yes, there have been some pockets, especially on the microfinance side, etc. But barring some small pockets like that, the overall credit quality is holding up very, very nicely. And fourthly, the valuation. So I just see all the four ticks in favor of the banks. So yes, right now the stock prices are under pressure because of the macro issues, but I think the sector is looking pretty good. And I think it makes sense to look at. I would say, I mean, it makes sense to go down the curve in terms of the quality. It's not just the tier 1 banks, but even some of the tier 2 or tier 3 banks can also be looked at.
Interesting. All right. Mr. Nandulkar, good morning. This is Alex here, first of all. So just a quick follow-up. You mentioned that you expect nominal GDP to go up. Do you have a figure that you've penciled in? And two, when you're talking about the sectors that you've highlighted, I'm just wondering whether, because of the kind of uncertainty that we've seen on the external front and the impact of crude oil prices, and therefore the flow through on various commodities, whether there's an expectation that you will have to adjust your earnings estimates for FY27, or is it too early to say?
Yeah. So in terms of the EPS revisions going forward, I think there will probably be some EPS revisions, not just for FY27, but maybe some of the companies will report a slightly lower numbers for the fourth quarter of FY26 as well. So to that extent, there will probably be some downward revisions. Right now, at this point in time, we're looking at next year FY27 corporate EPS growth at around 15%. Maybe it comes down by 1 or 2 percentage points, maybe 14% or 13%, something like that. But even if we assume a 13% type of a number, it is still much better than 8-9% number that we would likely see for FY26. So it's almost a 4 percentage point improvement. And to your first question on the nominal GDP, so this year FY26, we're looking at a nominal GDP growth of around 8%. Next year should be around 10 to 10.5. That's what we're looking at.
Okay. Mahesh, good morning. Hiral here. So that's in terms of your EPS estimates as well. Now, you mentioned about real estate as one of the positive sectors. All this while we were talking about a shift that's happening probably from speculative supply to need-based development. Within that purview, if you have to look at sub-segments, is it going to be urban housing? Is it going to be logistics? Is it going to be data centers? What segment of real estate are you betting on?
See, I'm basically looking at the listed real estate space. So most of these companies have a large part of their revenues and profits are coming from the urban housing. And that's a segment that matters the most from the listed companies' standpoint. Now, within that, what we are clearly seeing is that while the overall market may not really be growing as much, but what is definitely happening is the top 10, top 8, top 10 listed companies are definitely gaining market share. So even for FY26, which is the current financial year, we're looking at the pre-sales growth for the listed universe to be rising by 20% on a year-on-year basis. And over the last 12 months, the stocks are down by about 25%. So in one single year, the business has grown by 20% plus and the stocks are down by 25%. So in one single year, the valuation has got compressed by almost 45 to 50%. And as we can see, some of the promoters of these large listed companies are buying their own shares in the market as well, and which is in the public domain. So I think it's not just the the business that is doing well, but the promoters are also showing confidence in their own sort of company's share price as well, which I think is a great indicator. So to answer your question, Hiral, I would say that I'm basically betting on these large companies continuing to gain market share, even if the market as a whole does not really do that well, because these large listed companies are obviously well managed, well funded, and they have great execution capabilities as well. And we have seen this happening in multiple sectors when it comes to consumers, be it jewelry, be it retail, paints, cables, wires, etc., cement, hospitals, that a few large companies can outgrow the sector as a whole. So even if there are some concerns that the sector is close to peaking, but some of these large companies will continue to grow, the valuations are really, really attractive at this point in time. So I think it makes a great, great in terms of the risk reward outlook.
I want to ask about, well, you don't necessarily have to comment specifically on Eternal, but it is one of the top picks that Jefferies has, right? So, but what is the thesis here? Because the argument is right down the middle, Mahesh, with this one, right? So traditionalists would say there's too much cash burn. And the valuations are stretched even if they've come off from peaks. But on the other hand, you're saying the total addressable market is huge and growing very dramatically. So as things stand right now, given that increased pressure of competition is visible in the space, what would you say are the reasons why this is one of your top bets?
See, as you sort of very well know, I cannot comment on individual stocks.
Or the space, okay.
So I cannot really comment on any individual stocks. But at a very broader, e-commerce level, what I would say is that, there are certain segments which are prone to disruption by what we're seeing in AI and what we call in broader terms, the digital disruption. But there are certain segments, we believe will hold up much better, notwithstanding the disruption that is being brought upon by the AI. And secondly, we believe that there are certain segments, certain sub-segments within the e-commerce space where the industry is growing reasonably well. And so there are these TAM opportunities coming through, and so that's why certain sub-segments like the food delivery is something, or the quick commerce is something that we like. But I'll not be able to comment on any individual stock.
Okay. So that's with regards to quick commerce plays. Now, Mahesh, how are you looking at the defense pack? Because everyone's talking about the momentum that we will see. Order books could swell up as well. But if you have to look at the entire global defense theme right now, do you think Indian defense stocks are already priced into the global theme of defense right now? And where do you see that next pocket of where valuation comfort could come in?
Yeah, so defense is basically a thematic story, as you rightly mentioned. And I, just feel that, yes, the valuations are not strictly very attractive or mouth-watering as such. But given the fact that it's such a strong global theme, and given the fact that, even India needs to up its, CapEx program, in a meaningful way, we did see some part of that coming through in the recent budget as well, where the government has budgeted for almost 16-17% growth in the defense capex. My sense is that in when we actually close FY26 or FY27, we might actually realize that the actual spend is more than what the budgeted spend is. That's what I think, because right now we are sitting at 0.6% of GDP as the defense capital expenditure. Historical highs over the last 20 years has been 1% of GDP. And looking at the current situation globally, but also in India's own neighborhood, there is a very strong case for India's defense capex as a share of GDP to be at the highest end of the historical band and not towards the lower side. In fact, I would actually say more than the highest that we've seen in the last 20 years or so. So I'm very bullish on that as a theme. And you're right that the valuations are not strictly very, very attractive. And to some extent, they are pricing in some of this optimism. But I think it's a theme that is going to remain in vogue and remain very attractive over the next several years. So in that sense, we do have an overweight on the defense sector.
Mahesh, this is the most, always bullish, but this is the most optimistic I've heard you in a while. That's why I'm tempted to ask you, what's the fly in the ointment? What's the worst case scenario? Because I know you will always look at the positives and the possible challenges on the horizon. What can play spoilsport to this picture?
Okay, actually, you did not ask me any questions about the sectors that I don't like. So therefore,
this is the segue. This is the segue. Is IT in that list? I am curious.
Yes, so I do believe that market as a whole, so just to be very clear, I don't think it's going to deliver more than, let's say maybe like high single-digit returns over the next 12 months. I don't think that, we are in a stage where one can comfortably look at a double-digit return. I don't think that's the case, especially because from a top-down perspective, India is still an expensive market, despite the correction that we've seen. Our P multiples at the market level are still more than 20 times one-year forward earnings. And while it might look cheaper as compared to where we were, say, 1 year ago or 2 years ago, but those were crazy multiples to start with. So in that sense, we are on a higher side, and especially from the lenses of a foreign, equity investor, where there are options that are available in the other parts of Asia and in the emerging markets. The relative risk reward is not that compelling, especially because India's corporate EPS growth is actually lower than the broader emerging market EPS growth. But having said that, coming to your specific point as to which are the sectors that we are underweight or are sort of less favored by us, IT is definitely one of those. I would also go on to add FMCG or consumer staples. I would say industrials. Certain parts of broad-based industrial segments are also looking a bit vulnerable, especially given what is happening in the Middle East as well. but also given the fact that the government actually needs to spend more on defense, which also reduces the space that is available for the government to spend on the other type of infra verticals. So so those are some of the sectors that we are underweight on.
Yeah, that makes sense. The defense spends will crowd out other kind of expenditure as well. Mahesh, thank you so much for coming in and speaking with us. It's always a pleasure. Mahesh Nandurkar, Head of Research and MD at Jefferies India, with his view, looks at it in a positive sense, but does say that high single-digit growth in the markets is what you can expect from a 12-month perspective. So let's stay realistic. And that's actually what we're seeing right now as well. A lot of the gains given up on the Nifty and the heavyweights pulling it down.
Yeah, Reliance Industries in particular moved from green territory to red territory and proving in fact, pull up the contributors chart and you will see exactly that.
Yeah, no, and we said in the morning, we're still waiting to hear from the company. This is Trump who's going out and has announced what he wants to, but it is still the private banks which weigh in the most.
Exactly. I mean, we've been talking about that bullishness that's coming in from banks, but the street's still not very sure of whether to look at it or not.
And then there's practical. So in theory, they are great companies. In practice, the street doesn't seem to have that kind of reassurance right now. All the time we have on the show, from all of us sitting here, from all of the team that puts the show together, and there are a lot of people who put the show together. Thank you so much for watching. We'll be right back after the break with Ask Profit.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations. After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode single, 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 single. Kyunki tu hai single, 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 single. Baby, I'm your Santa.
first India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me, as always, is Mahima Vajrajani, and it's been a decent day, decent start in that sense for the markets, but largely a lot more to watch out for in the next couple of days, essentially, of how we end this particular week. Let's quickly look at how the markets are doing before we take all your stock-related queries, because as highlighted, we've continued to maintain that 24,000 level, but down almost 125 points now, and the GIFT Nifty did indicate a start in the red that has played out through, but hopefully we can find some support at these levels, because the markets started off with 30-point downtake and then has continued to be a down and out day. There are some winners in terms of the Nifty 50, and let's look at the heat map now. NTPC, Sun Pharma, Coal India, some of the defensive plays in that sense are doing well, but largely almost 32 stocks in the red, and you can see that majority, almost 15 or 20 stocks in that sense, are between 0 to 1% on the downside. So these can probably lead to some momentum on the upside, even if they get flat. That will be something that we'll be hoping for, but overall that's the trend for the Nifty 50. You are seeing some correction on the banking names, which is at a very interesting juncture, but that stays to be the story for now. The sectoral heat map also gives you that perspective, and we continue to monitor the metal pack, which is up almost 1.1%. Auto has been also another one area which has done well for the markets. It's down 0.6% today, but it's the banks, the private banks, which are continuing to be under pressure, and so is the Nifty Bank as well. So that's largely the story. The advanced decline ratio, before I toss to Mahima for the broader markets, has been the other key factor as we continue to monitor. Now, as we start the show, of course, we have given up a lot of those gains from the first hour of the trading session, but stocks which are advancing at 1800, Mahima, is a good stint to watch. A 3:1 ratio that we continue to maintain. We are very happy about that at this point of time, at least.
Absolutely. A slight narrowing in that chart, but whatever said and done, at least a 3:1 ratio is definitely indicative of the broader markets doing fairly better as compared to the benchmarks, because the mid cap 150 right now is trading around 0.3% higher, but the small cap 250 is doing even better. It's up almost 0.8% as we speak. Quickly, if we can try to pull up the BSE 500 before I go on to our guests. You have Adani Total Gas leading that pack, up 13%, followed by Happiest Minds. Second day of gains coming in for the company after raising its guidance. We, of course, did speak to the management as well. TTK Prestige up 8% as well on the back of induction, sales for them going up. Something like a Gujarat Gas, Prince Pipes also doing fairly well, but on the flip side, Colgate is losing grounds today. Reddington, KEI, Phenolics, Polycab, etc. are down in that range of 2 to 4%. But with that, let me welcome in our guest for the day, Vaishali Parekh, Vice President Technical Research at Prabhudas Leeladhar, and Mr. G. Choklingam, Founder and MD of Economics Research, joining us now. Welcome to both of you, and a very good morning to the both of you. I'll take up the first question, which is from Lalita, who's writing us from Bengaluru, asking about Apollo Tyres. She's got 20 odd shares, bought at the levels of 510. She is sitting on a loss of around 1,500 rupees right now. She wants to know as to what should be the next course of action for her. Vaishali, I'll come to you on this one. Your view on the charts for Apollo Tyres?
Hi, very good morning, all of you. So, of course, with crude price going high, and this was going to be a trigger, negative trigger for the tire stock. So, of course, these stocks have been corrected. But I would say wait it out, because if it's for a long-term horizon, you can average at lower levels, because this Apollo Tyres per se has come closer to its previous low, that is 400, 410 levels. So I think this is a level that she can average out also, or perhaps even in decline, because long-term cycle, I think we can look at it and it is at a, when I'm looking at the weekly chart, etc., it looks quite promising at these levels. So I would say average out at lower levels between 400, 410.
Got that view, Vaishali, and of course, welcome to the show. But the first caller for today, dialing in from Hyderabad, and Manoj has a stock query for us. Manoj, good morning, welcome to the show. What's your query?
Sir, good morning, sir. This is Manoj Srirangam from Hyderabad. Sir, I have the shares of SMS Pharmaceutical at the price point of 290.
Okay.
So, right now, what should I do? Should I buy or more, or should I sell it?
Got it. So you've bought it at 290. Is that correct, Manoj?
Yes, sir.
Got
yes,
it.
Sir, yes,
all right. And can you bought it with a long-term view or a short-term view?
It's a long-term view, sir.
Long-term view. Got it.
But in the situations of going now, sir. So what should I do? I don't understand.
Yeah,
so
fair enough.
Book the profit or?
Yeah, fair enough, Manoj, and I'm glad you called. Mr. Chokalingam, let me welcome, and of course, Mr. Chokalingam is the founder and MD of Economics Research at the show as well on the fundamental side of things. Mr. Chokalingam, he's sitting on decent gains for SMS Pharma. At this point of time, would you recommend him to continue holding? He's bought it at 290.
The company has done well, both in terms of stock market performance as well as fundamentals. But after rising phenomenally, it is trading at around 45 times trailing PE. And if you look at the market cap to sales also, which is one of the key parameters I consider in the pharma sector, it's more than 4 times. So it's fairly valued at this price. So I would maintain, sell on further rises in a phased manner. That would be my research view.
All right, the next question that we have is from Mohit, who's writing us from Ludhiana, asking about Bandhan Bank. He's got 500 shares at the levels of 187. The time horizon is 2 years. Wants to know as to what should be the course of action for him. Mr. Chokalingam, your view?
One can hold it. Of course, right now things are a little bad, but then, the tailwinds for the banking industry is quite good. In terms of price to book value also, it is only around 1.3, 1.4 times. This bank used to trade even at 3-4 times in the distant past. I don't think that can come back, that kind of valuation, but certainly, with the writing of so many bad assets, it can easily come back to 2 times price to book value. So therefore, I would suggest a hold recommendation on Bandhan Bank.
Got the view, and let's look at the next question now. And this one's on Capri Global. Now, Sriram Raghuraman is holding shares at 197. Mr. Chokalingam is actually asking a fundamental view on the stock. He holds roughly 25 shares. Is that a preferred pick in that sense? Would you recommend that? What's your view?
One can hold it. The stock is trading after the recent correction. It's about 2 times of price to book value. So considering the shareholder profile and the recent performance, one can hold it for a possible another 10-15% upside from current level.
Got your view, Mr. Chokalingam, but one of the key aspects at this point of time has been in the IPO markets, right? Because we've seen a few listings like CleanMax, like Fractal, which have not done well, and a company that listed today, Sedamac, and let's pull up that stock as well, because it listed at a premium of almost 15%, Mahima, at a time where the valuations were at 60 times price to earnings for this counter. So it's very interesting with this particular IPO in the auto ancillary space that even at such high valuations, even with the retail investors just buying 0.2 times of their allocated 35%, it's very interesting that this IPO has done well. And a lot, I don't think a lot of retail investors did buy into this given the subscription data that's available as well. But largely, I had a chance to speak to the management on what their benefit is, because there has been that, in terms of valuation, that was a key talking point. And I posed this question to the managing director, Shashikant Suryanarayan, about it, exactly on what was the decision in terms of the valuation for this. Let's quickly, listen in as to what his response was to the valuation question, as well as the retail investors not subscribing as much. Listen in. Largely relating to the IPO, a lot was talked about in terms of the valuation, right? Because, given the current multiple is what we've spoken about, almost at 60 times price to earnings, How did you assess essentially the value of the company at this point of time? Because in terms of the subscription, also the retail base has been a little lower than what I think you also would have anticipated. So if you can start us off with what was the expectation in terms of the valuation, and given, I'm sure based on future projections, if you can give us some perspective.
Yeah, good morning. First of all, this company is not interacting with investors for the first time. In fact, we have had a 17-year history of interaction with institutional investors. Most of it actually is disclosed in the RHP, including who invested at what time, at what price, etc. So it's a very long history of interacting with institutional investors. And over the last maybe 3 or 4 years, there has been a fairly significant secondary market activity in the company, even before we went public. So during the anchor investor process, many of the fund managers who sort of already are familiar with me, because I have been holding investor calls for 3 years now, once every 6 months or so, prior to the start of the IPO process. They had already seen these transactions and had built comfort on how the company is doing and what sort of valuation numbers would be okay with them. So essentially, they were comfortable with the nature of the transactions and the multiples that were seen earlier, and that carried forward in the IPO process. That's pretty much it. So it's not that some striking new discovery happened during the IPO process.
Got Mr. Suryanarayan. So, and the point well taken. Now, you largely, the services that you're offering in terms of, the embedded control units or ISG, those are very critical in the modern, essentially, way of manufacturing, which we've seen in the auto space. So, as the premiumization goes up, I'm sure you will be a key beneficiary. But talk us through your customer base, because almost, one particular auto OEM, TVS, contributes 75% of your revenues for the 9 months of FY26, and 91% are the top 3. So, any chances of diversification, if you can talk about new conversation with clients, or is it largely that the top 3 are growing so fast, so quickly, and the execution that you had with them over the years has been one of the reasons, and investors don't need to worry about that?
Yeah, so first of all, I think it's important to understand what this company is doing. It is bringing some fresh technologies. Okay, the word technology has been abused by everybody in all sorts of contexts. But what we mean by technology is a new way of doing something. So this company is actually making a change in the markets that it operates in. Okay, so for example, the change that we are making in the two-wheeler market was that until 2018, there was no two-wheeler in the country. Okay, no two-wheeler in the country that had an electric start that did not have a starter motor. Okay, so we are causing a change to the market by introducing a technology called sensorless ISG, and today a significant number of two-wheelers, including 5 of the top 10 models, have moved to ISG, and we are one of the reasons for that change. We are not a follower saying that, oh, this is happening and then we will also get in. So when a person who's making a change is in play, then what really goes on is that you have anchor customers. So people who are potential large deployers, in this case the large OEMs, 1 or 2 of them will see the potential of this technology and sort of make a call to adopt it in a big way. Okay, so that has happened for us with TVS Motors, and now with Bajaj Auto also coming. You will also see other big OEMs. There is already a Hero MotoCorp vehicle with our ISG. So you will see this consistently growing. And this is not new to us. 10 years ago, when we were not in two-wheelers, the same story was playing out with customer concentration with Mahindras and Kirloskar. So whenever you enter a new market and you are growing rapidly around a new proposition, customer concentration is very natural in the market that we operate in. And we do not see any issue with that. And just because by virtue of more and more adoption, it will naturally come down for any market if our propositions are significant. Even for this year, ending March 25 versus 9-month FY26, you will see a 5% drop in TVS's revenue share, even though we have grown so fast with them as well. So that's a natural process of adoption of any new technology in a market.
Well, that was the management of Sedimec, and the other key concern was 75% of its revenue coming from one single player. But of course, as the company starts listing, it comes up with its results. We'll hopefully catch a conversation with them on their future plans as well, but addressing those two key concerns. Let's go across to our next caller now. Sangeeta has a stock query for us. Sangeeta, good morning. Welcome to the show. What's your query?
Yeah, I was having an ITC shares and I got a bonus of 1,400 ITC hotel.
Okay.
And I was accumulating smaller number and I have accumulated to around 2,000 shares. The average price is 198.39. Should I need to accumulate on a long term or it's right time to exit? That's my question.
Got it, Sangeeta, and thanks for the query. Mr. Chokalingam, I'll come to you because it's a sizable quantity that Sangeeta holds, almost 2,000 shares bought at 198. And some of the gains have been reduced, right? From 400 stocks fallen to 300. Would you recommend her to accumulate more now or just continue to hold her existing holdings?
One can accumulate at current price. A, the stock has already fallen a lot, and B, the valuation has become little attractive at around 40p on trailing basis. See, the company has still left with a good amount of cash and some expansion plans. So the earning will definitely improve in the long term. However, I believe EIH Limited, I personally do not own, but I believe EIH Limited is a better bet in the hotel industry with the Reliance Group and ITC Group having around a 35% stake and valuation being more attractive than ITC Hotel. So I prefer giving buy recommendation on EIH. ITC Hotel hold, but one can accumulate for a long-term ITC Hotel as well.
Okay, all right. So that's the view on ITC Hotels. We've got our next question on ONGC. Umesh is writing in and he's got it at an average price of 284. 400 is the quantity that he's holding. He wants to know if he can continue to hold this for the next 1 month. Vaishali, considering the volatility in crude prices, do you think that one should keep this stock on their radar for trading right now?
Well, I would say so. Actually, the way crude had given a spike up to 120 levels, but in that reference, ONGC really did not move as much. So I would say keep a stop loss of 260, continue holding. I would for now maintain a range of 260 to 290. Either way, as we see a breakout or a breakdown would decide the next trend. So that would be my view for now.
All right, so that's the view on ONGC. We've got Mohan calling us from Bengaluru. Mohan, a very good morning to you. What's your query about?
Good morning. I have Rajratan Global Wire. I purchased shares of 20 years at the rate of 443. I just want to know for long-term view where I can add these shares for further and more.
Okay. All right. Got your question, Mohan. I try to take this with Mr. Chokalingam. Any view on this one, Mr. Chokalingam, Rajratan Global Wires?
Yeah, it has been quite a growth stock. Only thing is slightly its valuation is stretched. One can hold it. In case it falls another 5-10%, then one can buy the stock.
Got the view, Mr. Chokalingam. The next one's coming on Hindustan Copper. A short-term view is what our viewer Sunil is asking. Vaishali, would you recommend to buy now?
The overall full metal pack is doing well, and I think support band is between 540 to 500 levels. So those are the levels where you can start accumulating because long-term trend is still intact. I would look for a target of 650 to 700 for now. So according to me, it makes a good buy between the range of 500 540.
Okay, all right. The next question that we have is from Triambaka, who's writing us from Karnataka. He's holding 50 odd shares of HUL at an average price of 2230. Wants to know if I can buy more, average out from long-term perspective, or should I exit? Mr. Chokalingam, what's the view like? There are a lot of factors playing its part, right? There is new management which is focusing on premiumization, sharp razor focus on volume growth, but there's crude prices which might impact their margins, but there's also summer which is going to support a lot of their sales. What's the overall view right now on HUL?
See, you are touched a right point that in the short term there is a concern of this crude oil price rising because some of its business segments use the derivatives of oil. And two, last 3 years, all of us know that there has not been meaningful growth in the revenue or profits. And going forward also, FMCG sector is not going to grow in strong double digit. So I am not a fan of buying the so-called FMCG stock. I believe that they are going to struggle in really moving the revenue in a fast way. So I would prefer something like the banking stock, PSU banks, where I'm very confident of medium to long term growth rather than buying HUL. One can hold it time like this from the defense perspective, but I would not suggest buying the stock at current price.
Got that view, Mr. Chokalingam. The next one also coming in on a counter where a lot of investors have reported losses on Dixon Tech as well as Trent. Now, Harsha from Vijayawada has not mentioned the buying price, but she's at a 35 to 40% loss on both these counters. Mr. Chokalingam, we saw the HKC approval come in for Dixon yesterday. Some news on PN3 also getting easier. Do you think Dixon is a better bet in terms of averaging right now compared to Trent? Is that your view as well? What would you recommend Harsha to do?
Dixon is better than Trent in my analysis. I have been negative on Trent starting from over 7,000 price. I continue to maintain that it may not fall Trent, but I am wondering whether it can create any meaningful return from current level. Dixon is better, but however I would give just hold only because recently the government has approved over 40 licenses. Approvals they gave for starting the business in ECM, electronic component manufacturing. So this sector is also going to see a lot of competition. Of course, Dixon is doing better, but considering the competitive intensity forthcoming, I would give a whole recommendation on Dixon.
Okay, all right. So that's the view on both Dixon as well as Trent. The next question that we have is on Exide Industries. Maheshwari from Chennai is asking this question. She's holding 20 shares at the levels of 378. She wants a short-term view on this one. Vaishali on the charts for Exide.
So, well, on the charts, actually, the stock has only been consolidating. We have not seen much happening. But now that he's held on for so long, I would say continue holding because stock is showing signs of exhaustion as far as the selling is concerned. I would say continue holding with a stop loss of 300. And if we see some momentum setting in, this can go towards 360 to 380. 380 is the actual hurdle level. Above that, it defines a trend. Till then, I would just say it's a range-bound move. 300 as support and 380 would be the target.
Got the view, Vaishali. But time now for the rapid fire round in this edition of Fast Profit. Vaishali as well as Mr. Chokalingam request you to keep your answer on buy, sell or hold. Ramesh from Bangalore is asking a question on Coforge. He's bought it at 1685, Mr. Chokalingam. Should he average down right now?
No, I would maintain just hold on Coforge.
Okay, Jindal Saw is the next one. Ganesh is asking if we can get a short-term view on this one. He's bought around 185 shares. Vaishali, your view on the charts?
Hold.
SJS Enterprises bought at 1850, Mr. Chokalingam, in the auto space. Should our viewer continue to hold his 30 shares?
Yeah, continue to hold. That's my research recommendation.
Okay, Hyundai is the next one. Rohan from Kolkata is holding 9 shares at the levels of 1960. That is IPO price. Hold or exit. Mr. Chokalingam?
I prefer M&M. I believe M&M is far superior to Hyundai.
Prakrita has bought into Tejas Networks at 461, Vaishali. What can he expect in the short term for his 200 shares?
It's right now 477. I think 520 can be the target.
Okay, the next one is on shipping stocks. Vaishali, Shankar wants to know if this is a good time to invest in any one of these for the next 3 months. Any particular counter that you're liking?
Shipping Corporation of India going into a good trend. Buy with a support of 230. Look for a target of 280.
Good time to buy into ICICI and HDFC Bank, Mr. Chokalingam, is Rahul's question.
ICICI better banking stock between these two at current price.
Okay, Colgate is the next one. Vijay from Chennai wants a short-term view on this one. The stock is falling today, Vaishali. What's the view on the charts?
Stop loss of 2060 and target of 2240.
Jeevan wants to enter Clean Science at this price. Would you recommend that, Vaishali, and a target?
Yes, totally oversold. So target can be around 800 to 850. Stop loss is 700.
Okay, Motilal Oswal. Ram Prasad has purchased 130 shares at the levels of 930. Hold or sell, Mr. Chokalingam?
Hold.
G. Varnova TND from Satyan is his question, Mr. Chokalingam. Is it a good buy now?
I would avoid at current price.
Okay, Power Grid bought at 294. Continue to hold, Vaishali?
Hold.
Vedanta bought at 682 and our viewer is in a profit right now is Bhavit. Would you recommend Vaishali to exit?
Hold with the trailing stop loss.
Tata Communications bought at the levels of 16, 20, 42 is the quantity. Hold, sell or buy on the dips? Mr. Oklingam?
My view is hold.
The next question that's coming is on KRN heat exchangers. Bought 50 shares at 1013. What's the short-term view, Vaishali?
940 is the price. Hold. 880 is the support. Can go to 1050.
Anant Raj, 125 shares at an average price of 558. Kishore wants to know if you can continue to hold it for the next 1 year, maybe average. Mr. Oklingam?
Yeah, one can accumulate considering its aggressive foray into data centers.
Okay, all right. So that brings us to the end of this first round of rapid fire. Viewers, it's time to slip into a very, very short break, but we'll be right back answering all your queries on the other side. So do stay tuned.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7, #1 on YouTube. NDTV Network, streaming India's trust, leading India's conversations. The stage that brings together India's most compelling creative voices.
एनडीटीवी का क्रिएटर मंच है
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक।
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया।
इट्स ओके यार।
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं।
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go, grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
After the roaring success in Delhi, Hyderabad and Mumbai, the NDTV DP World PGTI Golf Pro-Am now travels to Ahmedabad. India's finest professionals, the city's most accomplished business leaders. Great golf, great company. NDTV DP World PGTI Golf Pro-Am. The course of champions, the conversation of leaders. 8th March, Kalhar Blues and Greens, Ahmedabad.
Money, fame, dirty money, fame. Spending millions every day, but I still the same. Ganti baji, jingle, 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 jingle. Bas aaj ka jingle, 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 jingle. Chal kare thode sing girls, sing girls, sing girls, sing girls.
Welcome back. You're watching Ask Profit right here on NDTV Profit. Let's go across to Narendra now. He's been patiently waiting by on our next caller from Hyderabad. Narendra, good morning. Welcome to the show. What's your query?
Good morning, everyone. Good morning, sir. Regarding happiest mind, currently I have 20 shares at the rate of 400 rupees.
Okay.
So I have 1 lakh rupees. Can I invest more on that?
What's your current buying price, Narendra?
400 rupees.
400. Okay. Okay, 400 rupees, and you are asking if it's a good time to buy more right now. Got it. Mr. Chokalingam, the last 2 days, it's been a stellar run for this counter. Narendra has been lucky enough to stay invested and bought it at 380. But is there enough evidence for you to give a buy call and accumulate more at this price?
I don't have enough conviction to give buy at this price, particularly in IT sector. Of course, I must admit that this stock has a tactical rally very often ever since it was listed. And if I go by fundamentals at around 33p on trailing earning, I would not recommend any small and mid-size IT stock at this juncture.
All right, so that's the view on happiest minds. The next question that we have is from Sanjay, who's writing us from Noida. We did briefly cover his Colgate query, but that was the technical take that we took. But Mr. Chokalingam, you gave a view on HUL. What's the view on Colgate? Because it's been topsy-turvy for them. Last 2 quarters they've not been able to perform well, but before that the volume growth was intact. What's the overall view here? And the stock is falling by around 4% today.
Colgate also more or less similar to HUL because some of the inputs are derivatives of oil, so to that extent it will affect. And if you see the December quarter also year on year, that's not meaningful growth in net profit. So at best one can hold it. I would not give a buy recommendation on Colgate as well at this juncture.
Got the view, Mr. Chokalingam. Next one's a query on Natco Pharma. Our viewer is holding shares at 882, and this is Chandra. Vaishali, would you recommend him to sell out, book profit for his 600 shares? He's currently at a profit of almost 83,000 rupees. Your view?
So I would say yes, partial profit should not be ruled out. But if I'm looking at a longer term horizon, I think partially do hold, because once we see the stock moving above 1050, that gets it into a strong weekly trend also, and that could give further targets of 1300 or so. So partial profit booking and wait. If it crosses 1050, then hold the rest.
Okay, all right. We've got our next caller. Shankar is calling us from Chennai. Shankar, a very good morning to you. What's your query about?
Yes, very good morning. I bought 202 shares Oil India at the rate of 499. Absolutely short term. What rate I'll accept?
When did you buy this? Just curious.
Short term only.
Okay, no worries. So Vaishali, the same thing, right? He's bought it from the perspective of crude prices rising and probably benefiting the company. But it's volatile in that sense, right? And that's why he's sitting on a loss right now. What would you recommend for Oil India?
Well, so actually there isn't much of a trend. So I would say all the same hold 460, because we don't know about crude also. Every day is a different story. So 460 is the stop loss and 480 would be the near-term resistance.
Got the view, Vaishali. The next question that's coming in, it's on Indian Bank, bought at 499 by Abhiraj. He's asking if he should continue to hold Mr. Chokalingam at this point of time. What would you recommend given newer updates coming in from Maharashtra, the loan waivers, PSU banks slightly out of focus, but your view?
No, the loan waiver historically over last 2-3 decades, it is proven that finally medium to long term the banks don't lose. The governments always make up for the losses. Secondly, Indian Bank is a quality PSU bank, but I prefer Punjab National Bank. That valuation is far better than Indian Bank in terms of price to adjusted book value. So I would give hold on Indian Bank, buy on PNB.
Okay, all right. So that's with regards to where the PSU pack goes, but it's time to look at the F&O space, and we have Sharad joining by to give us a perspective on how the Qs are looking like. Sharad, over to you.
Well, it seems like yesterday was the second, dead cat bounce, if you talk in technical terms, because there was a big fall happening from the day's high level, and today we are seeing that. Options data, however, is suggesting that there might be a range-bound move. It's not a very big fall, as it's not negating yesterday's up move. But yes, Adani Ports, Sun Pharma, NTPC, all of them holding the fort. They're in the green. But the reds have increased. Earlier it was almost 1:1, but now we see the reds are on the higher side. Bajaj Finance, M&M, Axis Finance, and even Bajaj Finserv, that is where the sell-off is happening. No major contribution coming in from HDFC Bank and ICICI Bank as well. They are also in the red. BankX, the technical setup is a little bit weaker as compared to Sensex, and the broader indices, however, are not that bad. Second straight day of value buying coming in, but a stock-specific approach is something you should be looking at. A long build-up, let's see. And we have Blue Star and Nalco making it to the list. The AC-related stocks are doing really well. And of course, some thematic up moves are also happening, but they are largely not there in the F&O counters. Also, let's look at short covering. This is happening for PG Electroplast and Samman Capital, while for long unwinding, let's pull out these two stocks. Muthoot Finance and Jubilant FoodWorks, they make it to the list as well. And also short covering, almost 50% of the stocks in the F&O universe are in that levels. Colgate, the volumes are specifically, higher side. It's down almost 4%. The reason is not known. KEI Industries, the cable wire stocks, yesterday saw a big sell-off, and today also the sell-off is continuing on a weaker Q4 expectations from the market. So these are the stocks which should be in your radar in the F&O segment.
Okay, sure. Thank you so much for giving us those details with regards to where the F&O space goes. But moving on to our next question, and this is on TCS. Piyusha has bought 65 shares at the levels of 3215. She's currently incurring a loss of around 23%, so that's around 47,000 rupees. Wants to know if she can average, hold or exit at the current levels. Mr. Oklingam, I'll come to you on this one. Your take on TCS?
I would just give hold recommendation considering the current volatility in the market, but I am quite reluctant to give buy recommendation on large IT stock like TCS. I really feel the marginal degrowth will be there in the industry. So I would just at best give only hold recommendation.
Got that view, Mr. Chokalingam. The next question that's coming in, it's on Bajaj Housing, and our viewer Arvind has bought 500 shares at 91. Mr. Chokalingam, roughly trading 2.5-3 times price to book, forward looking, of course. Should he average down right now at 84? Would you recommend that?
Exactly, it's around 3.5 times price to book value, which according to me is a fair value. So in case it goes below 80 to close to 75, then this could be an attractive stock for buying.
Okay, all right. The next question that we have is on L&T, and this is from DS Sudhakar, who's writing in and wants to know at what price can he go ahead and buy L&T. Vaishali, I'll come to you on this one. Considering the moves that we've seen on this counter on the back of war, do you think this is the right time to buy? It's found its bottom?
It's hard to tell because when market really worsens, then supports also break. But I think prominent support lies between 3650 to 3800 levels. So currently, yes, it's holding on to the 200-day moving average, but I would say such stocks not to buy in one go. Accumulate if there is further more decline, because market anyways is not showing any strength right now. So all the chances of this breaking the current support level and going perhaps lower. So I would say accumulate in tranches from here on at every depth.
The next question that's coming in, and for L&T, if viewers, you've been watching our show, Mr. Chokalingam is positive on this stock. VA Tech Vabag is the next question. It's a stock that's done well today, along with the other Jal Jeevan Mission stocks that we've been highlighting, all throughout the day. Stocks up 5.5%. And our viewer Sanjay is holding shares he's bought 40 shares, that's almost 1,640 rupees per share. He's asking if he should hold on or exit this counter. Mr. Chokalingam, the recent news flow actually of Jal Jeevan Mission and the outlay will be a benefit to all of these EPC companies also, right? So is there enough evidence to average down at this point of time?
I'm sorry, I haven't studied this stock recently, so I'm not able to give firm view.
On the technicals, would you recommend, Vaishali, that he should average down right now? What's your view?
So I would say so because these water stocks have really not participated, and right now we are seeing there are signs of reversal. So absolute discipline buying with support of 1150. This can be bought because if there is a continuation in the trend, this can go towards 1500, 1600 in times to come. So that's the way I look at it right now.
Got that view, Vaishali, but a very short break. Last 15-minute stretch covering him to solve your stock-related queries. Stay tuned to NDTV Profit.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी,
Jingle, 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 jingle.
बस आज का
Jingle, 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 jingle.
चल करें थोड़े
Single, 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 single.
क्योंकि तू है
Single, 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 single. Baby, I'm your Santa.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your ticket.
Welcome back. You're watching Ask Profit right here on NDTV Profit. If you haven't already, do send in your queries as soon as possible. So we'll try taking them in the next 15 minutes of the show. But caller coming in from Andhra Pradesh now. Bharat has a stock query for us. Bharat, good morning. Welcome to the show. What's your question?
Good morning, sir. I am holding SPML Infra at the price of 205, 727 shares.
Okay.
So today stock went up to 15%. I will go to Vaishali, madam.
Bharat, didn't we speak to you yesterday on this similar query as well, Bharat?
Yes, sir. Yes, sir. Yes, sir.
Well, you're taking advantage of our caller lines then I see. But I'll try taking your query, Bharat. But we'll take another stock query next time you call us. But Vaishali, on SPML Infra, should he exit now or is there a chance of coming back to his buying price of 205?
Well, in all likelihood, it is quite possible because 160 is a number of times the support has been taken, and today we are seeing a good bullish candle happening. So near-term target resistance is 200, but if we see the stock sustaining above that, then 220 would be the next level to watch for. So that's how he should strategize his buy trade.
All right, so that's the view for the charts for SPM and Infra. The stock is up almost 15% as we speak. But the next question that we have is on Himadri SpecChem, and the question is from a long-term perspective of 5 years. The viewer wants to know if he can continue to hold. He's not given us the quantity and price, but hold or maybe add more at the current levels. Mr. Choklingham, your view?
One can hold this stock. A long-term outlook looks good. With a lot of expansion in carbon black and also value-added segment. It's a good to hold for long-term. And in case stock corrects 5-10%, one can add for medium to long-term.
The next one's on, a stock that's, been very, very volatile in the sense, and that's LG Electronics. Now, pull up the counter today. Suresh Nair from Hyderabad holding 25 shares, bought at 1690. So he might have bought it post listing in that week itself. Mr. Choklingham, a very well-versed name, a strong franchise, went all the way down to 1380, and whoever was smart enough to buy it at that time is happy now. But what would you recommend Suresh to do? He's bought it at 1690.
One can hold at best. Trading at around 50 PE on a trailing earning basis is a fair valuation. I am more concerned about the sector. The sector has been struggling to post strong double-digit growth in the recent years. And I believe it is going to be very difficult to post strong double-digit growth in terms of volume in the future also. So at best, I would give a hold recommendation on LG Electronics.
Okay, the next question is on IRFC. Balaji Srinivasan is writing in and wants to know the 3-month target for this one. He's holding 300 shares at the levels of 90 rupees. So he's sitting on 10 rupees of profit per share. Vaishali, would you recommend a hold for the next 3 months?
Well, it's really hard to tell. I would say continue holding with a trading stop loss because market is right now once again getting into a selling mode. So if your round of selling occurs, I think you can go further deep down. So keep a stop loss or be happy with the profit that you're making.
Got that view, Vaishali. The next question, it's on Poonawalla FinCorp. Now, Anjali is holding 195 shares, bought at 532. Vaishali, it's corrected substantially from those levels. Is there enough evidence to suggest accumulating at this price as well?
So currently what we are seeing that the stock is in the process of making higher bottom. So absolutely a strict stop loss of 400. Below 400 it would again retest to make the previous low. So I would say keep a stop loss of 400. And if the rally sustains and if you see the stock moving higher, this can give a bounce up to 460 to start with.
Okay, all right. The next question that we have is from Venkat Ramana, who's writing us from Hyderabad, asking about 5-star business. Now, his buying price is at an average price of 689, currently sitting on a loss. Wants to know if he can exit or maybe add more at the current levels. Please give a fundamental view on this one. Mr. Choklingham, your view?
It is trading at around 1.6 times price to book value, I think, which is quite attractive. So I would give even buy call for medium to long term.
Wari Energies is the next one, and got that view, Mr. Choklingham, of course, on 5-star. Our viewer actually has bought at 1503. That's Ganesh, who's bought 9 shares at that price, which is the IPO price as well. So, and he's held on to this. Now, Vaishali, he's asking a short-term target. Would you suggest an up move from here as well? Because there have been multiple factors like tariffs amongst others that's been hampering the stock recently. Your view on the charts?
In fact, all this while the stock was showing good strength for a bounce back. So I would say 2770 would be the level as a resistance. So if you get a chance to exit at those levels, exit at those levels.
Okay, all right. So that's the view on Vari Energies. We've got Nitin calling us from Ahmedabad. Nitin, कैसे मदद करें आपकी?
हाँ मैम, मेरे पास Zydus Wellness है 380 पे 250 शेयर और मेरा टाइम होराइजन 5 to 6 months रहेगा.
ओके, ठीक है. आपकी क्वेरी समझ गए नितिन. मैं ये वैशाली से लूँगी. वैशाली, एफएमसीजी पे मिस्टर चोकलिंगम ने तो अपना व्यू दिया है, बट जाइडस वेलनेस के लिए चार्ट्स फॉर द नेक्स्ट 5 to 6 months क्या व्यू है आपका?
आई थिंक बने रहिए बिकॉज ये स्टॉक में बाउंस बैक आ रहा है और अगर 4-5 महीने का व्यू आप रख रहे हैं तो 430-460 तक ये टारगेट मिल सकते हैं.
Got that view, Vaishali. The next one coming in from our viewer Ganesh, he has 1 lakh rupees to invest at this point of time between Samvardhana Motherson and Hindustan Copper. Mr. Chokalingam, would you suggest a 50-50 allocation or a preference for one of those counters? Any view?
I would give my research view. Viewer can take his own decision. I prefer Samvardhan to Hindustan Copper purely on the basis of valuation.
Okay, Apollo Hospitals is the next one. Shiv Kumar from Bengaluru wants to know if this is the right time to invest from a long-term perspective. Your view on this, Mr. Chokalingam, and of course, a holistic view on the hospital space.
Yes, hospital space is a very interesting question. It has become one of the most attractive segment or sectors in the country. In the recent years, 50% of the FDI in health sector is going to hospitals. Second, we have seen a lot of deals within the country at even 3 to 4 crore per bed, enterprise value per bed. And third, this is remaining as a strong growth business. And fourth, it's a most defensive business, and nothing to do with oil or global war front, unless you pick up a hospital which has a hospital business in those countries. So Apollo Hospital is one of the most attractive stock. It's also part of Nifty. So tactically also it is possible for reallocation of from old traditional stock to this kind of defensive stock. And December result also really phenomenal from Apollo Hospital. So I have a buy recommendation at current price on Apollo Hospital.
Got that view, Mr. Chokalingam, and thanks for the parameters as well as the detailed answer as well. Another caller now from Hyderabad. Sumant has a stock query for us. Sumant, good morning. Welcome to the show. What's your question?
Yeah, good morning. Actually, I have a question about Coforge and TCS. So from the next 2 years, and which will be preferred pick and long-term perspective side. The people saying Coforge will be the higher potential side.
Got it.
And the leader of the business will be short-term. Don't think so, not much. And I'm looking for both which stock would be preferred for next 2 years.
Well, Sumant, I'll take this up with Mr. Chokalingam. And Mr. Chokalingam, you actually answered individually a couple of questions both on Coforge and TCS. So let me just spin the question a little bit for the benefit of our other viewers as well. Because Coforge had that big acquisition. And we also had another query who asked that why is the stock correcting as much at this time, because the other mid-cap players like Persistent are still holding on to the valuation. So if you can give us some perspective through that lens as well, which could help Sumant too.
Yeah. So why it is correcting? That's all of us know that it's because of AI threat. It's correcting more than the peer like Persistent because of the recent acquisition. I'm not saying it is wrong. So there is a fear in the minds of many investors that a lot of cash and equity dilution will happen for this acquisition. And however, the question is between TCS and Coforge. I prefer Coforge if I'm asked to give you between these two within the IT sector, because Coforge has done much better than TCS in terms of growth in earning and profits in the recent years. And therefore, I prefer Coforge to TCS.
Okay, all right. It's time for our second rapid fire round. Mr. Chokalingam, as well as Vaishali, try to keep your answers as short as possible. The first one is from Paru, who's asking about Ujjivan Small Finance Bank. From a 3 to 9 months perspective, what's the view, Vaishali?
Hold for a target of 62.
Moisture bought at 400 shares bought at 238. Vaishali, what should we do?
Hold with a stop loss of 160.
Okay, Cupid has seen a very big downfall. Arvind wants to know if this is the right time to buy this counter. Mr. Chokalingam, your view on this one?
I do not have valuation comfort on Cupid at this price.
Gabriel is asking if you should invest in Bombay Burma right now. Mr. Chokalingam, and I know you like the counter. What could be the allocation in the portfolio according to you?
I will give my research view. This is one of the topmost 2 high conviction stocks in our recommendation. It is trading at 85% discount to value of Britannia shares alone. Apart from that, it has got investment in other group companies and nearly 5,000 acres of rich tea plantation in Tamil Nadu plus 2 manufacturing facilities. So, but disclosure is that we have invested in this stock from company and personally family. Okay. So investors should take the advice from the investment advisor.
Okay. The next one is on Tejas Networks, and the viewer wants to know the next 1 month target on this one. Vaishali?
Target of 520.
City Union Bank, Mr. Chokalingam, bought at 100 by a viewer. Should Chris continue to hold?
Yes, long term looks very good for this bank.
The next one is on Pearl Global. Is it a good counter to continue to hold from a short-term perspective, Vaishali?
Pearl Global?
Yes, Pearl Global.
Well, 1 minute.
The stock
hold.
is currently trading. Okay.
Hold with stop loss of 1450.
Okay.
GRSC bought by by Swarnalatha actually at 51 shares at 3083. Mr. Chokalingam, your view?
Sell.
LT Foods, is this a good time to buy? Sampath from Coimbatore is asking this question. Vaishali, our technicals in the support?
Accumulate.
Reliance bought at 1400 by Faisal. Mr. Chokalingam, what's the 18-month view is his question.
Strong buy at current price.
Okay, Jindal Worldwide. Gauri Shankar wants to know if this is a good hold or sell. Any view on the charts, Vaishali?
Jindal Worldwide. Sorry, I don't have it.
The next one's coming in, by Ravi Chandran. He's asking a question on Brigade Enterprise. Mr. Chokalingam?
Medium to long term, it is good stock.
Zensa Tech, is this a good time to enter? Vaishali on the charts?
Zensa Tech is 565. Well, you may with a stop loss of 520.
Well, the last query for today, Nagaraju is asking on Vodafone Idea. He's holding 10,000 shares bought at 7.3. Mr. Chokalingam, he's asking a long-term view. What's your recommendation?
Fundamentally, it is not worth, but tactically, it is possible if government or stakeholder or lender make any sacrifice.
Got it. Well, that's the end of the rapid fire as well as this edition of Ask Profit. Mr. Chokalingam, Vaishali, always a pleasure, and thanks so much for helping us solve the 59 queries we have in the last hour. It does put the magical number of queries we want to solve in a day, Mahima, a little under pressure for the last half an hour, which we will be back for at 2 p.m. But we'll try and solve the other queries that we might have missed today at 2 p.m. for Ask Profit, the afternoon edition. Thanks so much for watching for now. KYC comes up next.
Trust is also placed lifelong. Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on the quality lifelong.
बिटिया की शादी है हमारी।
बधाई हो बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा। जिंदगी में जरूरत के वक्त हम अक्सर अकेले पड़ जाते हैं।
इसीलिए तो केपरी लोन्स आपको गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी,
Jingle, 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 jingle.
बस आज का
Jingle, 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 jingle.
चल करें थोड़े
Jingle, jingle, jingle. girl, thin girl, thin girl, thin girl.
क्योंकि तू है
Single, 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 single. Baby, I'm your Santa.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, one of the most loved KYC shows where we get you the most relevant companies so that you understand more. Be it a trader or a long-term investor, we get you all the details of the company. And let's give you some hint. Today is a very interesting company. I'll just give you a first hint. A lot of geopolitical tensions are happening. This company benefits from that. It's a Bengaluru-based defense and aerospace company. And also, it's just been 2-3 years for the companies to be actually listed, and they have recently got a 68 crore order win from HAL as well. Little bit of volume spike also did come in this company, and over the last 5 days, the stock is up 12% as well. These are the hints for the company, but remember, this company is very much important because the company is having an Israel angle to it as well, and we know US, Israel are on a war right now, so keep a focus on this company. The company's name is DCX Systems. This is the company which we'll talk about and we'll decode the order wins, the issues which are there in the company which is plaguing the stock price, at least on a long-term basis, and other important details as well. But why are we calling this company? The first one is definitely a recent news flow which has come in, and that's the HAL order win. That's the first reason. The second reason why we are trying to call the company is definitely going to be on the order book outlook and the demand trends. How are they looking for fourth quarter? So much geopolitical tensions, ladai, jhagda, war. That means this company becomes a proxy play for that. But there are more layers to it. Another important query would be the oversized PCB assembly facility. They are going into this segment with an arm. What are the key timelines and is धंधे में क्या मोट है? That's the big question we'll be asking the management. And the rise in orders from the Israeli customers. इनका एक बड़ा Israeli customer है. They have one large Israeli customer, and that's where we'll see other inquiries going up because everything is happening around us. Non-offset projects, what are the product mix strategies going ahead, and of course the margin outlook whenever there is a change in the product mix. So these are the important questions which we will be asking the management, and of course the capex and expansion plans of how things move ahead for this company. Also on the show we'll have the founder and chairman and the MD, he's Dr. H.S. Raghavendra Rao. He'll decode us all the important nitty-gritties of the company and also some queries which are written to me by the KYC viewers as well. We will address them as well. But now what we need to address is about the company. थोड़ा सा technical है, but मैं आपको simplify करके देता हूँ. Let's have a look. What's this company all about? It's a Bengaluru-based defense aerospace company, and I'll give you one more detail to it. That detail is it's established in 2011, and also there are different sectors which the company is focusing on. This is system integration and cable wire harnessing. This business is also there. Earlier the name was also regarding the cable, so that's where a little bit of pivot happened in the company's history. Electronic subsystem for aerospace, defense and railways. That is where the specializations come in. This is just not a defense company. There are other sectors also which the company is catering to. Also about the company, it's a preferred and the largest Indian partner for the Israeli defense company. Of course, there is a JV also with that. We'll come to that. But remember, एक company से क्या होगा? That's the client concentration risk which comes in, and that's why the company's focus might be moving to the other places as well. They are serving global OEMs, which includes AIA and ALTA systems as well. One is a railway JV also. So these are the Indian offset partner is something which the company is. Now the company is focusing on high-end electronics such as radars and electronic system in the warfare segment. That's where we'll understand how the company is going ahead, especially the defense as a theme which has picked up. They're diversifying away from Israel contracts as well to the US markets. Remember, Israel and US, both of them are allies in this war which is happening. So there is a good angle that company might get some more orders as well. The consolidated order book as of December end was roughly 2600 crore rupees. So we will be asking the management, Mr. Rao, whether this number can touch the 3000 crore mark by the end of this fourth quarter, and it's likely that it will. The key joint ventures, two of them are there. There is an NAIRT system. This is for the railway opportunity. That is something to look out for. And there's another JV also which is there. That's for the Israel company I'm talking about. ELTX Systems. There's a JV here as well. So company goes into this JV format, and there is definitely a transfer of IP as well. There are key clients also which is very much interesting. Rafael Group, Kalyani Group, Lockheed Martin from UK, and then we have Indian majors BEL and L&T also, which are there in the defense space. These are the largely defense clients which have propped up, which the company has shared in its exchange filings. The HAL order win, that's a 68 crore order win. That's important because it's a manufacturing supply of custom-made antenna coming ahead, and also to give in some more layer to it, this is regarding the airborne applications as well. So this is the reason why we have actually called the company, and of course the geopolitical tensions which are coming with it. Apart from the HAL order win, there is a new segment which the company wants to enter. That's the PCB manufacturing setup I'm talking about. This is called print circuit board. That is where the arm is expanded in the oversized structures of it. So that is something which we will be watching out for as well. Ranal Advanced Systems is something, if you are a technical person, this is for you. But if you are non-technical like me, this just means कि धंधा जो है बड़ा हो रहा है. Now they are expanding into this assembly and testing of this segment as well, which I spoke about. And also the third important announcement, apart from the recent news flows, includes the ELTA Systems JV. Now there's an incentive scheme which they are actually getting in from the Indian government, and this is regarding the defense facility where they will do the manufacturing for the JV partner in Israel, and company will be getting you the important developments. So this is the entire picture of DCX Systems, where it stands. It is into aerospace, it is into defense. But let's get into more details about our KYC show, how we judge the company. There are various rating parameters. Of course, income statement, balance sheet, cash flow, this is the holy grail. इस पे हम कोई change नहीं करते. This is something which we give you the first and foremost to see whether the financials are good or not. Return ratios, how things are panning out. Remember, company is doing capex, some pressure in the return ratios is there. And shareholding, how much movement has happened. Has the promoters reduced their stake? FISDIs are not liking this company. And street cred, one of the most important. Paisa kitna bana? There might be a lot of buzz around the sector, buzz around the orders, but at the end of the day, if the money is not made, then there is a concern for everyone. Valuations, we compare the company with the other defense plays as well. Largely it's a mid-cap, small-cap company, so we'll definitely have much more comparison in the mid-cap, small-cap space. And lastly, the outlook, be it the industry and be it the company-specific moves, is something which we'll talk about. But let's start with the first one, the income statement. How things are panning out for the income statement, and that's where my concern starts coming in. Look at that EBITDA drop. It's just 5 crores. Even the PAT numbers are weak, and this is where the story actually becomes critical for me in this analysis, is the bottom line numbers. This is very much important. The cash flows, the receivables, that's the big question mark which comes in our analysis. Let's see how the Q3 numbers were, because over here it's looking weak, and now the sea of red still continues, be it EBITDA, margin, PAT. Of course, the top line numbers might look good, but at the end of the day, if the cost of raw material is higher, or if there's a working capital mismanagement, or we could say an issue in working capital, that is where the concern starts coming in. And that's the concern for me in the income statement. It's a strong thumbs down when it comes to DCX Systems. But let's talk about balance sheet, how things are panning out. And balance sheet largely seems decent to me. The equity size has gone up. The reserves are also decent, around 1353 odd crore rupees. That means there might be future mein deployment ho sakta hai. That's what I would like to talk about. Even the cash reserves are still on the decent side. We are talking about this one concern definitely being raised by brokerages and a lot of analysts tracking the stock is the higher receivables. So we will ask Mr. Rao about all these details. The borrowings, however, interestingly, I really like this. It has come down from 509 crores to just 4 crores, literally a debt-free company. So on that level basis, I would be giving this a strong thumbs up as well. And yes, the cash bank balance is also at around 1,000 odd crore rupees. So on the other hand, income statement was an issue, but balance sheet is strong on multiple parameters. So a strong thumbs up when it comes to the balance sheet. But let's talk about the cash flow segment. What's happening here? Cash flow generally in these businesses are also lumpy. Remember, there are some B2G contracts also. And largely we see a good jump up coming up in the operating cash flows. But the net cash flows, that has actually come down. That means you can see in this business model, there's a lot of lumpiness here. So 3 years data is also definitely there. But let's give it a neutral rating right now because the company needs to give a much more longer period of history also to judge. याद रखिए सिर्फ 2 या 3 साल हुआ है इसके listing में. So we need to give a longer gestation period to judge a company like this. And the greatest investors say it's around 5 to 8 years if you are investing in these type of theme stocks. So you need a lot of patience. Cash flows, largely it's neutral. But let's talk about return ratios, and I think return ratios will be on the lower side, and yes, that is where the concern starts coming in. Why are the return ratios coming down? Of course, the equity base at times there's a movement in that, and also investments when they start coming in, the pressure starts coming. The receivables, if there is a delay at that, so there is a cascading effect, and that's why you see in FY22 it was 22. In 23 it was 13, then 24 it was 10, and then just 5. That's the concern coming in. These are the numbers and the ROC numbers I'm talking about. So question mark here as well. Now what happens? Does it bottom out from here? So it's a negative rating, I would say, or thumbs down when it comes to the return ratio. Let's pull up the shareholding, and there's a little bit of issues definitely there. The promoters, that's where there was 62% stake. Now that has come down to 52%, 10% stake dilution coming in. But let's see how FIs and DIs have performed. 2 and 11, it's going down, and it is going down. The biggest concern for me is the DIs. It was around 11%. That has come down to 4%. So there is a sell-off happening across most of the investors. Why is it that? And look at the public, how much it has spiked from 24% to 43%. And in these cases, absorptions happen in the stock, and it's not healthy for the stock, at least in the short term, medium term as well. That's a strong thumbs down when it comes to the overall shareholding as well. So some concerns have started coming in, and this is just not regarding the numbers. Why is so much sell-off happening? That's a big question to be asked, and Mr. Rao will definitely ask, especially on the promoter front as well. Why the reduction? Are they going to increase their stake later on? That's a big question to be put. Receivables is something which you look out for. Street cred, last month, it looks like a trading. It's around 14% up, the way the geopolitical tensions and the defense stocks were up. So if you're a trader, you must have made money out here in this 1 month basis. But since listing, since 1 year, and if you could just show the previous slide as well, over the long term period, or maybe in the 6 month period, the stock has been in the negative zone. Last 6 months also, the stock is down almost 28%. This year the stock is flat. That means most of the parameters, you haven't made money in this stock at all. And if you're a long-term investor, it does question your faith in the company. But short-term investor, it has been decent. So that's why let's balance it out and give street cred a neutral rating when it comes to the DCX Systems. But now let's get in the defense companies along the DCX system, whether the valuations are convincing to enter now or not, and that is where my concern also comes. MTARTEC is 219 times, data pattern is 83 times. This company itself after correction is still 55 times. So you can understand how defense theme as a whole is overvalued even after this correction. So you need to take everything with a pinch of salt, and even my analysis, you should do your own analysis and consult SEBI registered advisors as well. Just look at the other valuations, how things are panning out, and this is where the Zentech, that's around 45 times, and there's IdeaForge 38 times. So it's decent, it's giving mixed signals actually, it's right in the middle. And if you look at the peak valuations, it's definitely corrected 30 to 40%. So for DCX Systems, I will still give a valuation perspective a neutral rating when it comes to the valuations front. But let's look at the outlook. Is there any change here? But because I'm very skeptical about this company, and definitely There are some good reasons, but these are all long-term reasons which are known. The short-term reasons is something which derives or changes the stock prices. There are tailwinds coming in from the global geopolitical tensions. That's definitely known, but getting the order, getting the money, it takes time. There's a rising cost may impact the numbers in Q4, and we saw that hitting the bottom line numbers in Q3 already. The PCB's manufacturing is through its subsidiary Ranel Advanced Systems, so this is something we should look at. But remember, इनका gestation period ज़्यादा होता है, profit और पैसे आने में समय लगता है. Expanding global presence in the aerospace and defense, this is generic, but long-term positive definitely. But in short term, again, the question starts coming in, are they tapping into newer opportunities now via railways and the NIAT system? This is what we have been talking about, especially that Chennai defense facility. The focus definitely should be on the transfer of technology, TOT, something which we call, especially from Israel and US. And I'm purposefully talking about Israel because the largest contract manufacturer or the contract work which they have is from Israel, and they are trying to get things from US as well. So it's still a neutral rating for DCX Systems, going ahead as well. So overall, this is the entire picture I have given you. But let's just revise the ratings for this company, and I'm skeptical about this company, and maybe the management might clear the air. First is the income statement and the return ratios. That is where the pain is happening, and the market is not giving the valuation which a defense company might actually acquire in for. Balance sheet is really decent. There's a good cash flows also there. And let's just look at the other segments, and the biggest concern for me in my entire analysis was the promoter FIDI shareholding coming down in last 2 years. Street credit and valuations are largely neutral on both perspectives, which I have already discussed. Outlook long term is definitely strong, but medium term, short term, there are questions, especially on the costings front, the receivable front. So we'll get all of these details answered in by the management. But let's give you the full numbers of the rating parameter, and I have given this company 3 out of 8. It's a bit lower on the average KYC rating which I generally give. So definitely there are concerns in this company. So we will understand that and figure out what lies ahead as well. And to join us, to give us more details, would be Dr. H.S. Raghavendra Rao. He is the founder and chairman managing director. He's the promoter of the company with over 3 decades of experience. And to give in more perspective, he has a good stronghold in defense and aerospace sectors as well. So the man who knows what he is doing and the company itself is joining with us. And Mr. Raghavendra Rao, good afternoon to you, sir. It's always a pleasure to have you with us. First of all, I'd like to get your views on the recent HL order win. That's around a 68 crore order win. What are the key details and timelines for that?
Firstly, namaste. No. Thanks for inviting me on this. And regarding this HAL PO, which we have received recently, about 68 crore. And this is the biggest milestone. DCX has done it. And we are working for this program almost a year. Now we are able to take a first cut-off entry in HAL, one of the biggest DPSU in India. And also this PO is it is a airborne application. There is a special antenna and power supply. And this is the first step we have taken in HAL. And also we need to execute this program within 12 to 18 months. This is the lead time has been put it on the PO, and also we are confident to deliver this product.
All right, and Mr. Rao, of course, we talk about the costing also. The Q3 numbers did impact, was impacted because of higher costing. And the current global scenario, things are expensive and everybody is talking about it, right from gas to cable, everywhere. Even defense companies get some costing hit. So we can expect that in the fourth quarter because of rising costs?
Presently, I cannot able to disclose those numbers. And yes, there are some supply chain disturbance happening in the world. You are aware of well within that. And good thing is our production is not stopped because we secured majority of the material. Production is going on. Of course, there are other concerns. If this war continues, there is a travel, export due to the transport issue, and those issues may give us some trouble. And we are confident that we are going to do better. And also there is a lot of requests from our foreign OEMs, especially on Israel, to expedite the delivery because of the situation there. and we are working day and night to satisfy, and we are working towards to improve our schedule. But it is very early to say whether the logistic and dispatches and because of the our shipments are normally goes on the air, and via all this route, what is which is available now, it is not so easily transported. These are the challenges which we are facing it now. We need to see what is the upcoming days it will going to happen. When easy out, it will going to work it out. This is what we are figuring it out, and hope for a best.
Right. Hopefully, we all hope for the best. But Mr. Rao, just to get in more perspective, the demand trends, that means because of the issues which are happening in Israel, Iran and Middle East, do you think this dispatch of your deliveries, can they happen, beforehand so that your Q4 looks lumpy?
It is too early to say, because I mentioned and we secured, we are not seeing any supply chain challenges. But there are other challenges like many clearance and the transportation and the export and inspection, and OEM has to do the first article. There are some other challenges, but luckily we have secured some material. Production is happening, and some of the key portion, the raw material has been secured, and we start moving the production. But it is too early to comment on that, please.
Okay, that's fair enough. It's a very burning topic, and that's what we raise these questions in KYC. But Mr. Rao, another important perspective is there is a concentration of revenue from your Israeli customers. How much, I just take it a 1 year or a 2 year perspective. I'm not just going to ask just for this fourth quarter. Will this, revenue mix change? You're getting any good inquiries coming in from US, which is technically an ally of Israel?
Yeah, there is of course, war is not a good for humanity perspective, but there is a big opportunity for DCX, especially from Israel. There are two reasons. One is about 15 years, we are the Indian preferred partner for major company in Israel. Like take major 3 companies, which we are supplying last 15 years. We are a preferred offset partner or the non-offset partner. Anything comes to electronics related, it will come to DCX first. Secondly, the bigger advantage now, we have a joint venture with IAELTA. This will we expect more business to flow to DCX, because the JV is giving more comfort to them. And definitely there are big opportunity for DCX to grow big in this situation now.
All right, and Mr. Rao, apart from this, your capex and expansion plans for 2026, they remain the same, or are you looking at delaying them, seeing the current geopolitical situation? What are the numbers looking like?
No. In fact, we need to enhance our capacity for the situation now. We are already decided. We have a very good outlook for the 26-27. We are planned to put about a 1.5 million to 2 million expansion plan, especially on the cable and PCB side. And in fact, we have a lot of requirement of cable and PCB, which require more spaces, more manpower, more equipment. We are budgeting about a $2 million to invest on this 26-27.
Okay, so definitely you are gung-ho about your capex plans.
Yes.
But Mr. Rao, PCB, there is an expansion happening on the large case PCB facilities. That's what your arm has announced. And secondly, your Tamil Nadu facility is also going for an expansion. You have received some kind of an incentive from the government of India as well. What will be the growth outlook for your train business and, of course, for the PCB business?
Okay, let me explain the recent, the unique facility what we placed. Normally, I am in this EMS industry from last 25 years. Normally, the basically size of the PCB is limitation about 24 inches length. You can do it in India. In my knowledge, where I visited a facility, maximum you can do about 24 inches. That is the pick and place and other combination of machines. Now there is a requirement for a big customer to have this facility to expand this 24 to, we can go up to 56 inches PCB in the length. There's a huge, it's a huge PCB length. Where we have worked in fact, our engineers have worked with the foreign machine OEMs to make a custom built equipment, which has been put a lot of engineering effect. We bought that equipment to work with some US company, bought the equipment, installed. And also I said this customer, to have this facility, I need a commitment. and just to our relationship has given a 20 crore worth of order without having any the facility ready. We have a PO on hand. Based on that PO, we received an advance. We invested money for putting this beautiful, unique technology in the Ranil advanced system. This will go majoritarily in the present EMS. We can do normal. I will tell you for your this thing. Normally, people work in India about 24-20 inches is the length.
Right, Mr. Rao. We got an entire perspective on that. I know it's a bit technical, but we are short of time. We'll definitely understand more from you because you're a pioneer of this industry. But definitely it is wonderful to talk with you. And Q3, Q4 might be a little bit mixed, but nevertheless, orders are coming in, especially from the US segment as well. That's an interesting take coming in from you. Always a pleasure, Mr. Rao, joining us with us and giving the entire views for the company. So this is the management of DCX Systems, once a darling of the stock market, especially in the defense space. But now, of course, a correction definitely coming in. But now the geopolitical tensions are rising, and so are the customer inquiries for this company. Will this go for an up move? That's the question. But that's all, folks, for today. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations. The stage that brings together India's most compelling creative voices.
NDTV का क्रिएटर मंच है
where stories are shared, ideas are exchanged, and culture takes center stage.
जब देश पे हमला होगा तो सब एक.
आजकल चल क्या रहा है सिचुएशनशिप, आपको पता क्या होता है?
कभी मैं कह नहीं पाया.
It's okay यार.
NDTV Creators Munch, where creative India comes together.
हो सकता है ये कहानी बन जाए और क्रिएटर्स मंच के नाम से किसी दिन मैं रिलीज कर दूं.
2 powerful days, 14th-15th March, Sundar Nursery, New Delhi.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी
Jingle, 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 jingle.
बस आज का
Jingle, 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 jingle.
चल करें थोड़े
Single, 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 single.
क्योंकि तू है
Single, 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 single. Baby, I'm your Santa.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
Middle East uncertainty and also continued sell-off ails the Dalal Street. Nifty struggles near 24,000, even as Sensex loses almost 1,000 points. Broader markets see mixed moves. Auto financials lose the most. Hotels and restaurants across the nation reel under pressure. Many state hotel associations appeal to the respective state governments. Centre, meanwhile, reassures consumers that energy supplies remain stable. The Union Cabinet has approved changes to India's foreign direct investment policy, governing the investments from countries that share a land border with India. This includes relaxation of FDI curbs linked to China. Water resource and pump stocks gain in trade. This after the Union Cabinet approved the extension of Jal Jeevan Mission to December 2028 with an enhanced outlay of 8.7 lakh crore rupees. The project was launched by the Prime Minister in 2019 to provide safe and adequate drinking water through tap connections to all households in rural India. Sedemac Mechatronics makes a strong debut on Dalal Street, lists at 14% premium versus its issue price. Hello and welcome. You tuned into Markets at 12. I'm Nisha Podar and let's take you through markets at midday today. And remember, Nifty 50 is finding it difficult. It's struggling to really defend the 24,000 levels, given up on that level a few minutes back at the current level, at the current moment at a kissing distance. But remember, it's over 250 points lost on Nifty 50. Now let's take a look at Bank Nifty, which is also showing quite a bit of underperformance compared to Nifty 50. And that's the picture really playing out in Nifty contribution as well, as the top draggers on Nifty 50 are coming in from the banking space. So HDFC Bank taking the biggest brunt today with almost 60 points being shaved off out of the 260 points that Nifty has lost, coming in from one counter. HDFC Bank, ICICI Bank, Axis Bank are also the key draggers. In fact, when we take a look at some of the counters which have lost ground in the last few minutes of trade and has been consistently losing are Bajaj Finance twins, Finserv as well as Finance, and those heavyweights have been losing ground and also putting a massive pressure on Nifty 50. Big boy Reliance Industries is also down in trade. But when we talk about some of the counters like the PSU companies like NTPC, CIL, these are the ones gaining, and pharma is one sector which is doing much better in trade today. So there is volatility, there is weakness in the market at the current moment. Now, while replying to NDTV Profit's Nimit Dixit, well, SEBI Chair Tuhin Kanta Pandey hailed the FDI norms relaxation under Press Note 3 as a positive development by the government. Listen in to what he had to say.
You spoke about trust, reliable growth for India's priority sectors. How do you see the AIFs playing out their role, and where does SEBI play a part in that?
I think the AIFs are doing very well. As I said, that we had 5 years, we have a 30% growth, CAGR growth, and many ease of doing business measures we have also taken with due regard to stronger governance and other commitments. So with a 6.5 trillion rupees of investments and about 16 trillion rupees of investments, of commitments now, the AIF industry is actually growing very rapidly in India, and hope that they would be able to supplement the real capital flows into the right sectors.
Press Note 3, anything you have to say on the new government regulation on Press Note 3 that have come out yesterday?
No, I think that is a good development because it eases many processes.
So what are the policy changes?
All right, UPL had a major restructuring exercise that was announced just recently. Take a look at that particular counter and minor gains, flattish in trade at the particular moment. But if you really take a look at the 7-day chart for UPL, take a look at that. And there has been quite a bit of activity on that particular counter when it comes to the restructuring news and the impact on that particular counter. So take a look at that. Closer to the 52-week lows, I would say, and given up on the 52-week high levels long back. Bikash Prasad, who's the Group CFO of UPL, joins in with more details on this restructuring. Bikash, good to have you on NDTV Profit. Of course, a lot of concerns have come out. While the restructuring has been announced, it simplifies the overall structure of the group, but the debt issue really remains. How would you allay those concerns?
Yes. So if you first, I will start with, you know that UPL is at the center of global agriculture and food security. Over the past few years and decades, we have built a global size and scale with presence in 140 countries, market leadership in most of the markets, fifth largest crop protection company globally. With the evolving size and scale, it was the right time for us also to evolve our business or corporate structure. The purpose of the reorg or the restructuring is to actually simplify our structure through creating 3 distinct pure play platforms, which is seeds, crop protection, and specialty chemicals. The second purpose of creating this restructuring is also to strengthen our balance sheet, continue to deleverage our balance sheet, create a strong market positioning. As you know that after this completion of reorg, UPL Global will become the first listed pure play platform in India and second globally. So while debt is a concern from the market, has been concerned from the market, however, we have been deleveraging the balance sheet over the last several quarters, and from 4.6 times in FY 2024 to 2.1 times in 2025. And this year our guidance is between 1.6 to 1.8 times. Going forward, we are confident of keeping the leverage ratio below 1.5 times. Ultimately, our objective is to simplify the structure, bring a strategic focus, and unlock shareholder value for every platform and the group.
Because when you talk about the ultimate aim of deleveraging, can you give us a shorter time horizon on the deleveraging plan as of next financial year?
Yeah, so if you look at the UPL group today and that is platform, Advanta is net debt negative company. So it doesn't have any debt in the balance sheet. The India crop protection business also is cash surplus, negative net debt on its balance sheet. The Superform and the UPL standalone also has almost neutral, no debt in the balance sheet. So most of the debt today, which is sitting on the group balance sheet, is for our global crop protection platform, which emanated from the acquisition that was done in 2019 by way of acquiring Arista, a global leader that time. So most of the debt will be for UPL Global. So we feel that by combining the India crop protection business with the global crop protection business, it will bring that strategic focus, independent capital structure, and it will help in deleveraging for UPL Global as well, while it will also continue to deleverage at UPL Group level. And we have guided the market earlier that UPL Global, upon listing, will be between 2 to 2.3 times net debt to EBITDA.
All right, so those are the targets that you are looking at for deleveraging, but also management shared that both entities, as separate entities, will be much more adept at raising capital independently. Is equity fundraising also on the cards in order to balance out the debt equity ratios?
So as you are aware that we have been working on the deleveraging, and we had raised $400 million through rights issue during 24-25. We have announced and filed the DRHP for Advanta IPO, the proceeds of which also will be largely used for deleveraging the balance sheet at the group level. And we have multiple deleveraging levers at the group level, including the proceeds from Advanta, healthy cash flow generation from the platforms, and future potential to monetize, further monetize the platforms. So we are quite comfortable and confident on deleveraging plans that we have, and keeping the deleveraging ratio below 1.5 times, which is a very healthy, to also maintain a healthy ROE.
Right, so you mentioned about the Advanta IPO. Give us a sense, is the entire amount going to be used for deleveraging? And how could be the market response if you are really going for an IPO and using all the proceeds for deleveraging? Vikas.
Yeah, so we have filed the DRHP for Advanta in January, and it is going to be offered for sale. So we expect most of the proceeds to be used for deleveraging only. By listing Advanta Seeds business, I think it will create multiple opportunities. One, it will bring the strategic focus. It will create independent capital structure, which will drive growth and funding at the platform level. You also know that Advanta business historically has been growing at a CAGR of over 15% on the revenue terms. This year also has the similar trajectory. And over the next couple of years also, we expect the similar trajectory to continue. We have multiple growth opportunities within Advanta Seeds. And I feel that by having this pure play listed platform, it will help us to accelerate the growth plan for this platform.
Right. So, Bikash, of course, that is one leg, but the overall process is going to take 12 to 15 months. What are the most critical regulatory approvals on the anvil at the current moment? You're confident of the timeline?
Yeah, so we need approval from multiple authorities and regulators. We need approval from the stock exchanges, the SEBI, the NCLT, the ROC, RBI, the shareholders' approvals, bondholders' approvals, the lenders' approvals. There will be a series of approvals that will be needed. And it's also needed to ensure that the scheme is fair to all the investors and is fully compliant. So we expect that between 12 to 15 months' time, this restructuring process should be over.
Right. And when we talk about the valuation ratios, Bikash, what is the final share entitlement ratio when it comes to the shareholding, existing shareholders? You have quite a few private equity investors like TPG, Ardia, Brookfield as well. Give us a sense on that.
Yeah. So the share swaps or share entitlement ratios has been worked out by two independent valuers, Big Fours, EY and PwC. And further, the fairness opinion has been taken from another key banker, JP Morgan. Once they have presented to the audit committee, and the audit committee has reviewed it, it has been approved by them. And subsequent to that, the board also has okayed it. Valuers have used different methodologies, including the cost approach, the income approach, which is DCF, the market approach, which is the comparable companies multiples, or the listed price method, which is applicable only for UPL. And they have applied also the different weightages to the valuation methodologies. So I think it has been very, very comprehensive, transparent, and it ensures that the valuation, the swap ratios and the entitlement ratios are fair to everyone.
Right, and also Vikas, want to know, in terms of the peers, how is UPL Global really, stacked in terms of the margin profile and the profitability when we compare it to other global pure play peers like Syngenta as well as even Bayer Crop Sciences?
I think we are quite competitive, and if you look at our growth over the last several quarters, we have the industry-leading growth in most of our platforms. Even if this year, if you look at it, we have grown our top line by 8%. We have grown our contribution margin by over 300 basis points, EBITDA margin by over 200 basis points, and that has led us to have improvement in EBITDA by over 1,000 crore. But more importantly, our profit before tax improved by 1,800 crore plus. So our top line, our margins are comparable or better than most of the global peers. And with our focus on new product launches, focus on sustainable and differentiated, sharpening our portfolio through pruning down low margins molecules, we will continue to drive margins and growth for our platforms.
All right, Vikas Prasad, thank you so much for joining us and patiently giving us all the details that are on the anvil with this mega restructuring and also debt repayment. Thank you so much. And with that, UPL is gaining in trade, minor gains after the management commentary also coming in. So that's one stock to focus on. But we are also looking at Royal Orchids with a larger development that's taking place. And the stock is down 1.3% in trade, and we know that there is a lot of concern about the LPG shortage. Let's take it straight across to Amit Jaiswal, the CFO of Royal Orchid Hotels, who's joining in with more details on this particular aspect. Amit, always a pleasure to welcome you on NDTV Profit. Now, we know that the LPG supply concern has been ailing the overall hospitality industry. How's the ground situation and the ground reality at the current moment?
Thank you so much. See, at the right, as we talk, the ground reality is not very encouraging. And yes, there is a short supply of LPG. In fact, since Monday, the commercial LPG supply has been stopped by the dealers. They don't have the supplies. And as we talk, we are facing a lot of difficulty in most of our hotels, whether in Bangalore or in Mysore or in Mumbai, Maharashtra and Delhi. Most of the places we are facing a lot of difficulties in the supply, and nobody is sure about what's going to happen next. Right now, we are having some supply stock in our hotels, which may last for a couple of days. And after that, we are trying to move to some alternate way of cooking. That is the induction plate and, of course, charcoal and, the old ways of cooking. We're trying to do, but in business hotel, it's a little difficult.
Right. How grave is the situation, Amit? If you are saying that your stockpile will only last for 2 more days, and you have alternate sources, but that, as I believe, cannot really continue for too long. What are the alternate sources of sourcing LPG, and what are the government agencies telling you? Because I do realize that LPG supply, because of the shortage, has been directed and diverted towards more priority sectors. Is that an impact?
See, of course, that's an impact, but I really don't understand how the government is deciding on the priorities. See, at any given point of time, we are operating 120 plus hotels across India. And at any given point of time, around 15,000 guests are staying in our hotels, in the rooms. I need to feed them, right? And apart from that, my employees who work in the hotels also need food. So the situation is very grim, and hopefully government, right now we are talking to the dealers and all, and even if you would have heard that the Bangalore Association, the Hotel Association have already told to shut down. However, the things are very tight and we are looking forward to the government, and I think some kind of meeting is going to happen today. And I don't think that hotel supply of LPG to hotels is a luxury. It should be covered under essential. We have stood with the government during the COVID times, and we have taken the responsibility of government by converting a lot of our hotels into a quarantine center. So we have done all the whatever is the society requires. So at this point of time, if the LPG supply is cut, which has been stopped, let me be very clear, it's not the reduction, it's the stoppage. Stoppage is creating a lot of problem for us, and hopefully government will do something to start the supply. Maybe they can ration it in the, we understand that this is a very difficult situation, wartime, supplies are not there, what the government can do, but it can be rationed, I personally feel, so that, everybody has the right to survive.
No, Amit Jaiswal, your points well taken and very emphatically made points as well. And what you're saying is that the hotel hospitality sector is not a luxury sector, and some bit of the reserves need to be apportioned. That's your ask that's coming out. Amit, you mentioned that there is a meeting today. Many associations of hospitality have already raised concerns in various states and cities. What is the meeting about? With whom, and what are you expecting and what are you presenting there? If you can clearly state that, please.
So our association is meeting the central ministry in Delhi today and trying to put forward our concerns and the requirements, and hopefully we are very confident that something fruitful will come out of it. I can understand that there is a problem. See, as a citizen of the country, we have to understand that there is a problem. The supplies has been stopped. But I think we can manage for some time with rational supply. Please also understand, the government has to understand one more thing, that there are a lot of bachelors in cities like Bangalore, Pune and Gurugram and all. There are a lot of bachelors who are staying. And those bachelors are depending for the lunch in the office cafeteria and for the outside food. They are highly dependent on that. So I think, cutting down or stopping things won't work. We have to rationalize it and we have to ration it so that, everybody moves, with some limited menu or something like that.
Right. So, Amit, when you talk about the steps being taken, and you also presenting to the government your point of view and asking for some bit of the reserves being diverted towards hospitality, but it won't still be enough. How do you assess the immediate impact after in 2 days, like you run out of the LPG reserves? How do you estimate the impact on the company or a listed company? The stakeholders would also like to get a sense on how this situation is impacting the company.
See, the impact, I will say, if you talk of revenues, I don't think so there will be a huge impact. But yeah, operating the hotels, we will have a lot of difficulties. Like we are trying to move to, the induction plates and also to charcoal. So we see all hotels have the facility of getting charcoals. But, cooking in charcoal is not that easy. It's a very... You need to plan it in a big way. So we are doing that. We have no other choice. We have to do. I cannot tell my guests, get out, I can't serve you food. So, but yeah, difficult situation.
All right. And Amit, one more question quickly before I let you go. The overall situation has also caused impact on the movement of people. Has it in any way impacted your overall traffic at the hotels as well? The war situation, the geopolitical tensions and the uncertainty around the movement of people. Have you seen any impact on the company, and how do you feel it about the sector per se?
See, as far as the sector is concerned, yes, your point is well taken that foreign nationals not come, foreign international travelers, there is a reduction. But to be very frank, Raw Lockheed and Regenta Hotels as a company, we are not dependent so much on the international travelers. We are a domestic travelers supply is very good for our hotel, and we have not been affected till now. But of course, if the the luxury hotels, if they don't get business from the international traveler, then they will try to take some pie out of our stakes. And so we are looking forward to that. As of now, I have not seen any much decline in the occupancy or the ADR. But if this war continues, then definitely there will be some amount of effect on our revenues.
Right, tourism, hospitality, all of them stand to get impacted. But the big worry, Amit, for your sector is the LPG shortage. In fact, we'll take stock of the situation after you've had the meeting with the government, and hopefully there will be some measures taken to help out the industry and the hotels companies as well. Thank you, Amit, for candidly sharing all the concerns with us right here on NDTV Profit.
Thank you so much.
Thank you. All right, and it's time to wrap up the show. Nifty 50 reconquering 24,000 level. Remember, that's a level it's struggling to defend, but at the current moment, just about at kissing distance there. With that, it's a goodbye from me. Thanks so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी
Jingle, 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 jingle.
बस आज का
Jingle, 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 jingle.
चल करें थोड़े
Sing girl, sing girl, sing girl, sing girl, sing girl, sing girl.
क्योंकि तू है
Single, 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 single. Baby, I'm your Santa.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen, And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, standing at the NDTV Profit market pit with all the action in the markets. I mean, you know, what we saw in today's session completely fizzled out. There is that cautiousness, Sharad, that is prevailing in the markets, but the sentiment from a geopolitical perspective is slightly lightened.
Exactly, that's the important question. And Hiral, good afternoon. The interesting thing is the Asian markets opened green, and I don't know why the Indian markets, that's where the sell-off is happening. And the sell-off is not a minor range-bound one. Look at it, we are near the day's low level. It's at around 24,000. Seems like there's a basket selling happening from a fund. Let's look at Nifty Bank, and that is where the BFSI. Remember, FIs have a good exposure there. That's down 1.5%, and Asian markets still in the green, and the global sentiment is not that bad comparatively. So there definitely India is an outlier in today's trade itself. But what are the key factors to look at? That's also very much important. And yesterday, whatever gains we had, most of them have been wiped out. That's the first one. Also, second trigger is definitely going to be on the Nifty banking front, and that technical setup is looking much more weaker because there's a big sell-off in the BFSI name. Bajaj Twins, HDFC Bank, all of them are dragging. This is where the concern starts coming in. But whether this will continue or not, that's something which we'll be watching out for, especially in the last half an hour of the trade. Nifty is testing 24K levels. Nifty Bank is testing 56K levels. This is where we are seeing a minor technical bounce happening, or the options data is suggesting that some kind of a sell-off definitely can happen, at least in the day's trade as well. So if you are an intraday trader, be very, very cautious and have a good discipline system as well. Apart from these key triggers, moving on, the India VIX, that has jumped up again 8% above the 20 mark. That is where a little bit of concern is coming in. Global cues are still suggesting risk of sentiment is still there, and to and fro, and the US CPI data also is very much important to show where the risk on sentiment or the risk of sentiment will pick up for the remainder of the week. So definitely there is a little bit of confusion in the global cues, but India is a stark underperformance as compared to Asian and even European economies, and that's the key question, why?
Absolutely. In fact, the selling that's happening in terms of Reliance Industries, the selling that Sharad is mentioning in terms of banks, these are the two important things that we want to watch out for. And there is some bit of resilience that's coming in terms of broader markets. So that is one positive sign that we're looking out for. What will be interesting is to see what's happening in the second half of the trading session as well, because broader markets are showing some bit of strength as compared to your large caps as well. There is selective bottom that has been seen in many sectors, but probably I'm saying it'll be early to confirm this kind of a signal. And if there is short covering that happens, that will probably give some bit of confidence in terms of buyers. But this is levels of 24,500, 24,600 is what we need to watch. Until then, probably this volatility is going to stay. But moving on, let's quickly address the watch list. Electro Steel. That is the top gainer on Nifty 500. In fact, Jai Balaji, strong volumes along with Bajaj Twins. Adani Total, now crude price impact is what is aiding this one along with GAIL. You have fertilizer stocks which are buzzing on the back of the government intervention. Nifty Auto and M&M, the sector is one of the top losers, from where you have M&M, which is one of the top losing stocks in trade today. IEX, the carbon credit certificate framework that has come in, is putting some positive momentum on that counter. Induction stove demand to go up. TTK Prestige and StoveKraft are buzzing in trade. Sedimac, a good listing in this kind of a market. You have KEI and Polycab. Q4 impact is seen on these two companies on the back of channel checks.
Happiest Minds, you've seen a FY26 guidance upgrade. Strong moves there. And you have your water infra companies which are buzzing on the back of Jal Jeevan Mission 2.0. So pipes and pumps also in focus. Summer stocks, hotter summer forecast that is coming in. So your consumer durables are buzzing in trade. Colgate-Palmolive, the management is positive on the Q4 growth. And you have a Geo Financial Services where a Motilal Oswal has upgraded the counter. They've initiated a coverage with a buy rating. And IT stocks, Nuvama is absolutely bullish with that increase in target price coming in there. So that's what is on our watch list today. But let me head across to Sharad, who will take the rapid fire with Gaurav Sharma of Globe Capital.
Thanks a lot, Hiral, for that. Good afternoon, Gaurav. Always a pleasure to have you. We'll have a rapid fire segment, buy, sell, hold. And the two stocks from the cash market I've picked up on the volumes. First is Jai Balaji and the second one is Electro Steel Castings. Your views on that?
Sharad. So firstly, Jai Balaji, it is the first day of rise after a prolonged sell-off. It is better to avoid this stock till the point it is trading below 75. Once that is taken out, it will head towards 82. And as far as Electro Steel Cast is concerned, stock is at a 20% upper circuit here. I still find no meaningful reason buying it at these levels. It is better the stock consolidates and gradually surpasses 78-80 zone, then only a buying interest towards 90 would evolve.
All right. Apart from that, Adani, Total Gas and even GAIL, these are some tactical bets which analysts are talking about. Your views on that? Further up move is possible?
Yes, further up move in ATGL is pretty much likely. The stock went up after the company announced a increase in its gas prices now. So this is a positive thing coming in for this, kind of a blessing in disguise for this company. A further upside towards 580 is pretty much possible.
And the fertilizer stocks, Gaurav, Fact, NFL, of course, these stocks definitely move on news flows, but it has been positive setup over the last two sessions. Your views on that?
I prefer to stay on the sidelines as far as these stocks are concerned. They are very much news-centric and 1 or 2 day move and they just fade out. So I think that 1 or 2 day move has already set in, so no point buying them now.
All right. And Bajaj Twins, a good sell-off happening here. And interesting, and it looks like a basket sell-off, to be honest. Your views on it?
I totally agree with that because frankly I've been on the hunt to look at the reasons behind the sell-off, still unsuccessful in that. So I think this is fund sell-off or some kind of rebalancing that we are witnessing as well.
Exactly, we had seen that in some FIs also. That's a very important point you have talked about. But apart from this, let's talk about the other group of stocks. That's the Nifty Auto. Especially the two-wheeler stocks are tanking in trade. M&M is also down. On a positional basis, I just want your view on Nifty Auto. Has the near-term top been made?
Little bit early to say whether we are close to the top or not. Because it is a performing sector. As far as today's trade is concerned, yes, among the underperforming ones. But I think it is better to wait for some more time because continuously what we are witnessing is that reasonable rise in auto sales numbers. And if that continues, we would probably see a U-turn coming in the auto stocks anytime soon. So better to wait and watch for some more time now.
Exactly. So you cannot rule out the U-turn which can be made in the auto stocks. That's a very interesting thought on that. But Gaurav, apart from the auto segment, let's talk about IEX also, India Energy Exchange. A bit of corporate development coming in. The numbers fundamentally have been really strong last 4 to 5 months. Your views on it?
IEX has been at the sidelines for quite some time. It has been an underperformer. As far as the numbers are concerned, decent set of numbers coming in for the December quarter. As compared to December 24, it is a 10% rise in terms of sales that the company has managed to report and a 10% uptick in terms of profitability as well. So that has to continue. Then only a sustained up move will be possible because there is a certain bit of negativities that still rule and run around the stock. So I don't really think that considering the ongoing sell-off, there are other options as well to bet for.
All right, and very interesting theme. Moving on from the LPG gas usage, there is of course an issue happening to the induction cook. There are two stocks, TTK Prestige and even StoveKraft. These StoveKraft's management also spoke with us, talking about a jump in the demand for the induction setups. Your views on that? Is good time to book profit in these counters and significant up moves in both of them, or do you think there's a much more up move left now?
I think again, blessing in disguise for this space. A shortage in the gas segment is building up. Team for these kind of companies. I think this can last for a couple of days more also, because the gas situation doesn't seem normalizing, at least today or by tomorrow. So we can hold on for a couple of days more.
All right, you can hold on for these stocks for a couple of days more as well. Thank you very much, Gaurav, for this rapid fire. Over to you, Hiral.
Thank you, Sharad, for that. In fact, let's look at stocks that are trending on Google currently, because this was the list that we were looking at from NDTV Profit. In terms of Google trends, if you see the counters, Dixon Technologies, Happiest Minds, we've been talking about it, Interglobe Aviation, Cupid, Oracle, Financial. Now, Gaurav, let me come to you with Happiest Minds. I don't know, I think we did speak about Happiest Minds as well as Oracle Financial. Now, both of these are buzzing on news. Oracle Financial on the way, the parent Oracle has reported numbers, and Happiest Minds on the guidance that they've upgraded for FY26. What are charts indicating?
First, let's address OFSS. We are bullish on this stock. Very well value, very good parentage, and among the IT services company, this is probably among the most stable ones. Although have not performed in the recent past, but from a longer term view, we are pretty much positive on this. So among the two, Happiest Mind and OFSS, my bet would be towards OFSS.
Interglobe Aviation also, which did see a gap up opening, has cooled off now. However, from a fundamental perspective, the street is looking at a positive development on the back of the CEO resigning. And you have the promoter who's stepping in the interim. Do you see any momentum in terms of charts?
Not really, Hiral. Momentum is certainly not there. It is just that the price is holding on around their normal range. So from an investment standpoint, one should hold on their position. No point exiting the stock here.
That's with regards to stocks which are trending on Google. But thank you so much, Gaurav, for joining in. Always a pleasure to speak to you. We've been talking about the cooking gas crisis. A lot of hotels are of the opinion that they will have to shut shop for some time till the time the cooking gas issues are resolved. How deep is the concern? What is the kind of impact we're expected to see? We have Vishal Vittal Kamath, Executive Director at Kamath Hotels, joining in. Vishal, good afternoon. Always a pleasure to speak to you here on this side. My question coming to you is, we're talking about a LPG shortage. That's the fear that the street is looking at right now. A lot of hotel associations have come out and said that probably we will continue operations for the next 2 or 3 days. Some are saying a week. What is the situation on ground?
So the situation is exactly as you've described it. Unfortunately, the LPG shortage is hitting different places at different times. In some of the rural areas where we operate, some of the vendors have already stopped supplying. In the case of Mumbai, it is again depending on each one how they are managing. So definitely, as I've been watching before also, that induction ovens and other things and such other tools are coming more in the limelight. I think that this is basically going to affect, when people talk about hospitality, hotels and restaurants, everybody thinks of only the upper layer, the 5-star or the premium. But actually, majority of the people, and especially in a city like Mumbai and Bangalore and wherever you have a very young, strong workforce, a lot of people depend on the smaller joints for their daily meals. They don't have a kitchen or they don't have the ability to cook because of their work timings or other things. So they're depending on a lot of these smaller establishments, and that's going to really impact overall. So it's not really about just dining out. It's about your living life getting affected on every front.
Okay, so Vishal, what is the kind of impact you're seeing if you have to look at a Kamath right now? From the number of outlets that you have, what is the status?
So the good part for us, because we've been an eco-friendly group, we've already been moving towards induction cooking. Like our Pune Orchid Hotel is like 90% induction. Mumbai Orchid is about 25%, and we are in the process of as we speak, we're using our resources, moving it around to basically make sure that we do not have any interruptions with our MICE, our corporate, our conferences, because guests are calling. They are saying that, will you be able to supply? Will you be able to do our conference? And luckily for us, in most of our places, like say Shimla Orchid or Hyderabad Irabai Orchid at Mindspace, there we have all full electric kitchen, 100% electric kitchen. So just like I said about Pune Orchid, even though we have like 1 lakh square feet of banqueting, we aren't affected there. But then there are other places like Panchgani or like our Lotus Murud, or in Orissa our hotels Ira and Lotus. There what we've done is we have done a mix of where we are able to do outdoor cooking. We are going back to outdoor cooking. That's the fact that we are again chula wapis chalana. So that is happening in some cases where it's possible. In other cases, induction thing. But I think each one has to find its own way. And in a place like Mumbai, where it's very difficult, I think the government needs to really come out in terms of being able to liberalize. Like in Mumbai recently, your channel and others covered that the coal and other things were banned and they were stopped. Now again, we are finding ourselves back in a odd situation. So I think this is somewhere where a midway needs to be worked out between the practicalities of daily consumer requirements.
All right. One more question. Hi, good afternoon, Vishal. You spoke about chula, you spoke about lakdi, you spoke about everything possible. But what are the mitigation measures as the industry, not only your company, is actually currently undergoing right now? What's the jugaad here?
So everything in life is not about jugaad, and I think Indian businesses have moved more and more beyond jugaad towards innovation and solutions, or finding proper solutions. So I don't think it's about jugaad. It's more about coming out with effective solutions to certain problems, and in some cases you might not be. For example, my wife, when she was renovating her restaurant about 2 years back, with very grudgingly, even though an electric kitchen costs 40-50%, sometimes double the cost of a conventional cylinder-based kitchen, grudgingly she did it because I convinced her. And today about the day before yesterday, I called her and I said, now you got to thank me. She said, I'll thank you for many things, but for what? I said, because you're the one of the only restaurants which will be running without any issues per se. So I think there's not about jugaad. It's about making sure that within whatever urban environments or rural environments we are in, using those to the best advantage. In Fort Jadavgarh, we started a small chula for our staff kitchen and other things for dal and rice and other things. In our Lotus Murud, we have done that. In Orissa, in our Konark, which is on the beachfront, we have done that. Why? Because it's open. Because there the norms are different. But can we do that in Mumbai? No, we cannot. There we'll have to see other methods, which are basically induction cooking, modifying our menus, making sure that we have food which is being able to easily be cooked from an induction rather than looking at just the traditional slow cooking or other things. So there will be some challenges, but I think it's a time where the nation needs to come together to fight this global challenge we have.
Yeah, so basically,
as an industry, we're together.
Okay, so industries together, things need to come in place, but there is some impact. But hotels which have moved on to induction may see less impact. Let's see how this pans out. Thank you so much for joining in. Always a pleasure to speak to you. And as Vishal was mentioning that everyone's moving to induction as well. We did speak to the management of StoveKraft, whose business is into induction cookware as well. They are seeing a 3-time surge in its electric cooktop sales, and this is data that they've collected from online channels. The stock also trying to inch higher once again. Let's listen into what the management had to say.
Current challenging times has also given more challenges to the thoughts of domestic households. There is definitely a huge surge in consumption of electric stoves, both induction and infrared cooktops. While we manufacture LPG stoves also, but in the category of induction cooktop, we are seeing very high surge in consumption.
Quantify that, sir. And is this something that you've seen over the last week and a half?
Yeah, it's in the recent times. As it is, we are leaders in this category, but we are seeing very high buying pattern both on online and offline channels on the induction cooktop.
Sir, can you please help us understand what this number is? If you can quantify it, even if you talk about percentage terms, what is the kind of increase if you compare it with the last quarter, etc.?
So we call this DRR, daily run rate. So So what we can actually measure, particularly on the online channels, we are able to get real-time data. There is a kind of, in the last 1 week, we are seeing 3x kind of surge in the induction cooktop category.
So that's the view coming in. In fact, let's also get in Gaurang Shah of Geojit Financial Services. Gaurang, welcome to the show. You know, we've been talking about the impact that hotels, restaurants are going to see in terms of unavailability of cooking gas. And this becomes a benefit for companies like Prestige and StoveKraft. Your views on both of these segments?
Well, thank you so much, Hiral, for having me on the show. Good afternoon to all the viewers of NDTV Profit, to you and to your entire team. A small disclosure, all recommendations that I'll be sharing with you this afternoon on your show, Hiral, are a part of our fundamental research team recommendations. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar ideas with our clients. They might have their investment interest. So on TTK Prestige, on the fundamental side, we have a positive coverage. StoveKraft, unfortunately, we don't cover, so I won't go into specific buy, sell, and hold, but StoveKraft happens to be a strong player in the sector and with a decent market share like TTK Prestige. This particular situation may stay on for some days, Hiral, as it was a statement made by the Honorable Minister, Mr. Puri, yesterday, that all resources are put in place to secure India's energy requirement, whether it is crude oil or it is natural gas. The government is in talk with 40 plus countries to ensure the availability and continuity along with that at a reasonable price. So I think sooner or later we might have a little bit of more positivity. But yes, as of now, the hospitality sector is facing the highest amount of hit in terms of short supply of gas for their kitchens.
Right, but let's talk about the cable and wire segment also. Yesterday only we saw sudden sell-off happening in most of these stocks, and the question is why? So to give that answer, we are joined in by Puneet. Puneet, why the fall all of a sudden in cable wire stocks?
Well, it's been a volatile time, right? Especially in the month of February for all these cables and wire companies, and that's largely led by weak copper prices. So you have seen that while January was good in terms of price hikes and dealers were comfortable with stocking up at that time, in the month of February, the prices have again started to come down. Now, what this does is lead to losses of inventory, because you purchase the expensive inventory in January for example, at 100, now the price is 90. So you wouldn't be able to pass that on to the consumer, and hence the dealers, they've gone slow at this point of time. JM Financial has also highlighted that because of this, the distributors are down trading essentially to smaller as well as regional players, and there's also been some stoppage of work activities which require these products as well. So we are seeing impact on KEI as well as Polycab today, but the volatile copper pricing within the quarter is definitely a weak sentiment for these companies.
Thanks a lot for that, Puneet. That means there is concerns happening, and especially in fourth quarter, we might see that impact in the numbers also. Gaurang, good afternoon. Sharad here. Your views on this development in the cable wire company? It's likely to be a muted fourth quarter.
So, Sharad, good afternoon to you as well. And before this, we had new entrants coming into the cable and wire sector. That also created a little bit of turmoil in the existing players. Market had a feeling that new competitors will come in with finer discounts and eat into the market share, but nothing like that. We have a positive coverage on a couple of companies in the cables and wires, Phenolix Cables, Polycab, KEI Industries. I will also add one more name, which is a diversified play, Havells India. They also have a small portion of cables and wires in their product offering. So we remain positive short term because of availability of raw material, inventory built up, price absorption by the corporates, or how much they are willing to pass it on to end consumers like you and me. It remains to be seen. But yeah, short term there is an issue, but there is possibility of price pass on also.
Right, and of course Havells is also in the green. There is an angle of AC stocks which are going up, and Havells has the brand called Lloyd's as well, and that's why maybe it's holding up in the trade. But just a quick question on the important announcement of Jal Jeevan Mission 2. You know, all the water infra theme stocks, the pipes, and even the solar pump stocks are rallying in trade today. Your views on that, and which would be a good, decent medium-term setup pick for you?
So this is a continuity process announced by the government in terms of Jal Jeevan Mission. Along with that, Sharad, the government and the minister, honorable minister, has also spoken about Har Ghar Mein Nal or Nal Se Jal. So I guess this is something that is going to have a huge positive impact on players. Prince Pipes and Philonix Industries, these are the two names we have a positive coverage. In terms of water treatment and likewise, we have a positive coverage on a company called VA Tech Wabag or Vatek Wabag, however you want to pronounce it. And my sense is that I think this is the need of the hour. We need to have a lot of new reservoirs and storage facilities to safeguard any kind of shortfall.
All right, so that's the view coming in from Gaurang. Thank you very much for taking out your time, and it's always a pleasure to talk with you. Well, folks, that's all for the show. We are at the end of the show, and that's it from me, Hiral, and the entire team which has put up trending stocks. Stay tuned to NDTV Profit. Up next is Lunchtime Trades.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. Number 1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी जिंगल 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 बस आज का जिंगल 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 चल करें थोड़े जिंगल 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 क्योंकि तू है जिंगल 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 baby I'm your Santa.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you.
Middle East uncertainty and continued sell-off ails the Wall Street. Nifty struggles near 24,000 even as Sensex also loses more than 1,000 points from the day's high. Broader markets see mixed moves. Autos, financials lose the most. And hotels and restaurants across the nation reel under pressure. Many state hotels associations, in fact, appeal to the respective state governments. Centre, meanwhile, reassures consumers that energy supplies remain stable. And the Union Cabinet has approved changes to India's foreign direct investment policy governing investments from countries that share a land border with India. This includes relaxation of FDI curbs linked to China. Meanwhile, water, resource and pump stocks are gaining in trade. This after the Union Cabinet approved the extension of Jal Jeevan Mission up to December 2028 with an enhanced outlay of close to 8.78 lakh crore rupees as well. The project was launched by PM Modi in 2019 to provide safe and adequate drinking water through tap connections to all households in rural India. And Sedemac Mechatronics makes a strong debut on the Wall Street, lists at a 14% premium versus its issue price. Good afternoon. Thank you so much for tuning in to Lunchtime Trades with me, Shreyansi Singh. This is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, a very quick look at the markets. When you talk about Nifty, it's very well below that 24,000 levels, just about a 250 point thereabout cut, almost a 280 point cut in fact coming in. As far as the Nifty is concerned, Sensex as well about 900 odd points, almost a 1,000 point cut. In fact, when you look at the current movement right now, about 1.2% downtick is what you're looking at when it comes to the Sensex as well. And when you talk about sectors as well, you're looking at autos leading the losses, followed by financial services, bank, consumption, rural, realty, FMCG. All of these sectors exactly in that order. Those are your top sectoral laggards as well right now. What's holding up quite resilient is something like pharma, energy, oil and gas, even metals managing to retain some bit of shine right now in trade. So that's largely the kind of uptick that you're seeing as far as some of those sectors are concerned. But with that in mind, let's take a quick look at the list of losers right now. So something like a Polycab India, KEI Industries, those are some of your losers that are down quite a bit. But when you talk about just within the Nifty 50 pack as well, Bajaj Finance, that's also down about 3.5%. Axis Bank, M&M, Bajaj Finserv. In fact, Bajaj Twins under pressure. Bajaj Auto as well, trading with a downtick of about 3%. Heavyweight HDFC Bank was also not managing to do anything right now, 2.5% cut right now. So no semblance of hope coming in for the markets from some of your heavyweights right now. So something like a Maruti Suzuki, Tata Motors, PV also trading with cuts right now as we speak. But when you talk about some of the gainers as well, something like the Jio Financial Services, Coal India, Wipro, Sun Pharma, Tech Mahindra, those are the stocks that are managing to gain just a tad bit.
But with that in mind, let's quickly take a look at the entire space when it comes to oil prices and gold prices. So it's been quite the volatile day as far as oil prices are concerned. In fact, when you talk about the prices right now, let's quickly take a look at the moves that you're seeing when it comes to Brent and WTI right now, because it's actually a very interesting picture that you're looking at when it comes to oil prices. Let's see if we can try and get those rates also up on the screen. But just to give you a sense of the broad picture that we've seen right now, you do have IEA proposing really a record release of reserves to curb prices, and members are going to be deciding on this particular proposal, which is exactly why right now, as you can see, Brent and WTI right now in sharp opposition to each other in terms of the kind of movements that you're seeing when you talk about prices. There you go. So the Brent move right now, about a 0.1% downtick coming in for Brent, and WTI as well, about a 0.4% uptick coming in. So that's largely the kind of lackluster sort of in terms of cues picture that you're looking at when it comes to oil prices. There's a lot to make sense of right now when it comes to oil as well as gold. In fact, to do just that, we do have Kunal Shah, Head of Commodities Research, Nirmal Bang, also joining us right now. Mr. Shah, thank you so much for taking time out and joining us. It's actually a very interesting market, and I say that because when you talk about oil prices, it's been quite the flip-flop moves that we've seen since this morning. When you look at Asian trade, there was a little bit of recovery, at least in the first half of Asian trade. Right now, prices seem to have really paired some of those losses and really flip-flopping between picking a direction. That's Brent and WTI right now for you. Do you think that the IEA proposing that record reserve, that's something that has anything to do with it right now, or what are the triggers that you're looking at?
Well, like you said, it's a very interesting and a tricky market because on one side, what we are seeing is there are just talks. There are no release of supply, and we have seen after hitting $120, Brent is again back to 87. Okay, but if you look at the supply scenario, there are no fresh release. There is just an hope that there's going to be a release of oil, and even if they release 300-400 million barrels of oil, which is equivalent to 7 to 8 days of supply. After that, what? So right now, we are just in a complete dark. We don't know what is going to happen. We need clarity, more clarity in terms of what is going to happen in this war. And I believe that this is likely to remain like this till we have any clarity on what is going to happen with the Strait of Hormuz, whether it is going to be open, whether it is not going to be open, whether the supplies will continue to remain there within the Gulf, or it is going to go out. So apart from China, India, if the supplies are going out to the other nations, so oil and gas supply is a major concern. 20% of the gas, 20% of the oil comes from Strait of Hormuz. So if that doesn't come and hit the market, I think even though the IEA releases the extra surplus, that can trigger a $5, $6, $7 fall. But if the war doesn't get, if there's no agreement and if Strait of Hormuz gets blocked, then there's a possibility that again oil prices may start moving towards upward trajectory. But it is very difficult to oil to breach $120. So I believe on the upside $95 to $100, and on a downside 78. So this is the range where I foresee. Before I make any prediction, we need to see what is happening on ground, because there are just talks. Mr. Trump has said, I will release, I will unblock, I will escort all the tankers from the Hormuz, but nothing has happened so far. So we need to see what is happening, and then we can take a call whether it's going to be a problem or whether it is going to be a smooth scenario. So I think it's a wait and watch mode right now.
No, absolutely. And that wait and watch mode, Mr. Shah, that's something that we can very clearly see being reflected in the prices also when you're talking about oil. I also wanted to get a sense of what you think about what happens when IEA announces this record reserve, if they choose to go ahead with it. Now, you've pointed out that just about a $6, $7 fall is something that we could be penciling in. But do you see that fall also sustaining? Do you think that in a market like this, where supply concerns are still there very much so, do you think that that can really be getting prices back up, or are you looking at a sustained fall coming in?
I think it's very difficult for prices to, keep sliding downwards until we have some positive resolution coming out of this geopolitical conflict which is going on. So the possibility of downside from here is very limited, $78 to $80, like I said. And again, the possibility for it to again move up to $95 to $98 stands very high. So we don't like it. I hope and I pray it doesn't happen, but it seems that oil can again shoot up if there is no release of supply. And even if the supply is released, that relief will be very temporary.
No, absolutely. And just when you talk about the entire gas picture as well, that's also quite the complex dynamic that you're looking at. I'm wondering if you have a comment on that as well. And then perhaps we'll try and figure out whether the risk premium right now is perfectly baked into the pie. I'm just wondering if you're looking closely at the kind of gas prices that you're seeing internationally, if that's something that you do track and that you have a comment on, because right now, as things stand, across the country, you do have the LPG crisis that we have on the back of all of the supply disruptions, and the government has chosen to prioritize domestic supply right now versus commercial supply. That's something that hotel and the dining industry as a whole is really dealing with. Just a quick comment, if you will, when it comes to the gas markets.
I think gas prices are likely to remain under pressure. Are likely to remain in the bullish trend. The main reason for that is currently whoever is producing gas, they are not able to export it because of the closure of the Hormuz. Okay, and that is complicating this problem, because now what is happening, the fresh supply which can still hit the market and which can continue, those new production are also going to decline if Hormuz remains closed for another 15 days. So I see and I wish and I pray that it doesn't happen, but things doesn't look very nice at this moment.
Absolutely. A lot of prayers across the nation also, especially when it comes to the entire hotel industry that, echo the same sentiment, Kunal. But I also wanted to try and get a sense of what you think about the geopolitical risk premium, like I said. Do you think that it's perfectly baked into the pie right now, if that's a term that you can be using, for the risk premium? Or do you think that there's some more weight? Now, right now, things have pretty much stabilized, at least in terms of there not being an escalation of sorts when it comes to the Middle East conflict. Things are remaining as they stand. So given that entire backdrop, what are you thinking about the war premium?
I think we don't know, honestly, and there's no point in making. I think right now there is a possibility that another $10 of risk premium can get built in oil on a conservative basis, and also in gas. So gas and oil, until we see a meaningful solution of opening of Hormuz, I don't see a structural downtrend in these two commodities. They are likely to remain on the up move only. No matter what happens, whatever the IEA does, whatever the US does, the fall will be temporary.
No, absolutely. I just, not to extrapolate here and make assumptions, but that $10 figure, I wanted to try and understand how much room there is right now when it comes to the war premium. Quickly, before we let you go, also wanted to get a sense of what you think about what is happening with the gold markets as well. A little bit of safe haven demand that you have, a bunch of triggers that you're looking at when it comes to the markets. What kind of levels are you then looking at against this escalated safe haven demand?
I think the maximum upside we see is still 50 to 50. So if a trader can buy, the maximum upside which can come is 50 to 50. Beyond that, we recommend, once 50 to 50 gets achieved, we recommend to again go short in bullion, and it can go down till 51.20 and that kind of level. So in this scenario, the entire leverage trade gets unwinded, and that's where even the gold can witness some selling. So a bounce can be expected, but I don't think so it will be sustainable.
All right, then. So a bounce is something that you should be penciling in, but it is not sustainable. That's the key commentary coming in there. Thank you so much, Kunal, for taking time out and joining us this afternoon. So there you go. That's the entire picture when it comes to the oil markets, the gas markets. That's a dinner table conversation right now, and also gold. But on that note, it's time for a very quick break right here on Lunchtime Trades. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी जिंगल 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 बस आज का जिंगल 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 चल करें थोड़े सिंगल 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 क्योंकि तू है सिंगल 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 सिंगल
Baby, I'm your Santa.
First India tour in your city. Rock on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial.
Welcome back. Thank you so much for staying tuned in. Time now to take a look at some of these counters that are buzzing away in trade. Now, of course, you are penciling in a harsh summer that is expected to drive strong demand across some of these segments. Right now, something like a Vari Energies is holding on to smart gains right now. Something like a Voltas also. Let's take a look at some of those stocks as well, because 1.5% uptick there about coming in on some of those counters. Like I said, a harsh summer is expected to drive strong demand across beverages, cooling products, packaged drinks, and seasonal FMCG categories as well. In fact, Mahima is joining in with the key stocks that stand to benefit from this particular heat-driven demand surge, and it's quite the uptick coming in for a lot of these counters, and an interesting update at that.
Absolutely, Shreyansi. So the expectation is that this summer is going to be a harsh one after the kind of monsoon that we've seen, last year, which kind of impacted a lot of these summer sales. The expectations are that World Meteorological Organization has said that there's 60% of chances of El Nino southern oscillation happening, which means there's going to be higher temperatures coming in, which could benefit a lot of counters that benefit from, heat summers. IMD is also expecting an above normal temperature when it comes to temperatures up till mid of May or till the end of May. Increased heat wave days are expected until May, like I mentioned. Now, a lot of counters stand to benefit from this. Firstly, when it comes to beverages, you have Varun Beverages, which is the largest franchisee of PepsiCo in the world, and this is set to benefit. United Breweries, beer manufacturers generally benefit from heated summers, so that would be in focus. Then, in terms of where FMCG names are concerned, Tata Consumer runs mineral water brand Himalayan Water, so this might also see some bump up in sales. For Tata Consumer, even Starbucks could benefit from selling off cool drinks and cold products as well. Dabur will also be in focus because 15% almost of their revenue comes from juices. This includes Real brands like Real, etc., and Real Active as well. Their market share has also been bumping up in this space as well, and this space has seen a benign volumes coming in last year because of harsh monsoons. Be Natural is the brand of ITC that can also benefit from these harsh summers. Now, moving on to the next category, bottling and packaging, manufacturing of all of these products could benefit, and AMD Industry, which manufactures these packaging articles, could benefit from this. Hindustan Foods, which is one of the most trusted FMCG contract manufacturer for marquee brands, could also benefit out of this. And you have the last counter on the list that could also benefit from this, which is Orient Beverages, which also helps in manufacturing packaged water as well as under the drinking trade brand. Ice creams could also benefit from this. So Vadilal Industries, 16% of organized market share right now is held with Vadilal Industries, and Arun, which is a brand of Hatsun Agro, could also benefit from this because it has a very large scale presence in the southern markets. Lastly, in terms of where consumer durable stands, your AC sales, fan sales, etc. will bump up. So counters like Voltas, Blue Star, Symphony, Lloyd, even Whirlpool, Johnson Control, as well as Orient Electric could benefit from this. Orient Electric specializes in fans as well and premium fans as well. Imami could benefit because of Dermicool and Navratna, which is around 40% of market share right now. And Zydus Wellness could also benefit from Nycil because that also has a 34% market share. So these are some of the consumption names that could, Shreyansi, possibly benefit from harsh summers coming in.
No, absolutely, and you're factoring in that 60% chance of El Nino southern oscillation as well. Thank you so much, Mahima, for joining us with that entire update. So there you go, that's the entire update coming in as far as the harsh summer is concerned. And that is the entire list of stocks that you should be keeping on your radar as well. But moving on then, LPG shortage continues to loom over restaurants in Mumbai. Operations have come to a complete halt because LPG unavailability, of course, is something that you're looking at right now. And Matunga's famous South Indian restaurant, Ram Ashray's manager, in fact, tells NDTV that with no LPG at all today, they had to shut down entirely. Let's go across to my colleague Sujata Dwivedi, who's at the restaurant earlier today. Take a look at that particular report.
The hospitality sector in Mumbai is facing severe crisis because of the lack of LPG shortage. At present, we are here at Ram Ashray. Now, this is one of the most prominent places that you'll find in Mumbai, where not only Mumbaikars but prominent celebrities from Bollywood as well as politicians love the menu because of the iconic and the great taste that the restaurant provides. But at this point, the operations have been completely suspended, and visitors who want to come in and taste the meal have been asked to leave back because they won't be able to provide them with anything, because the majority of the meals that is cooked here at this particular restaurant, it includes a lot of fuel, and it is a slow cooked dish that it consumes a lot of time, and LPG cylinders are utilized on a greater scale. We are here at LPG. Let us at this restaurant which utilizes LPG. Let us speak to the manager present here. आपसे जानेंगे कि फिलहाल आप लोग जब आ रहे हैं उन्हें मना कर रहे हैं, क्या स्थिति है?
रीज़न यही है, गैस नहीं है अपने पास।
अच्छा,
गैस नहीं है तो भी क्या कर सकते हैं मैडम, बात यही है।
तो कितने बजे से आपने बंद किया हुआ है इसे?
नहीं, बंद नहीं है, अपना चालू है, लेकिन जो अपने पास अवेलेबल है वही कस्टमर को हम लोग दिए जा रहे हैं।
क्या क्या अवेलेबल है, क्या क्या नहीं अवेलेबल है?
फिलहाल अभी शीरा अवेलेबल है अपने पास, चाय कॉफ़ी अवेलेबल है, इतना ही अवेलेबल है। जो अपने पास अवेलेबल कस्टमर आते हैं उनको बोल देते हैं सर अपने पास यही अवेलेबल है। रीज़न यही है, गैस नहीं है अपने पास।
इडली डोसा जो आपका फेमस डिश है वो नहीं बन पा रहा?
नहीं, गैस ही नहीं है, फिर कैसे बनेगा मैडम?
क्या तो सुबह से कितने लोग लगभग आके चले जा चुके हैं?
नहीं, ऐसा उसके बारे में कोई आइडिया नहीं है। फिलहाल तो मतलब था अपने पास, अभी जस्ट ही ख़त्म हुआ है। हाँ, सुबह से ऐसा नहीं, कस्टमर आ रहे हैं, खा के जा रहे हैं।
फ्यूल का शॉर्टेज, एलपीजी का शॉर्टेज पिछले कितने दिनों से हो रहा था आपको?
फिलहाल ये 1-2 दिन से, आज एक कल
ज़्यादा हो रहा
जी।
तो यदि अगर आज जैसे आप लोग चालू रखे हैं, आज जो बना लिया आपने, अगर कल तक आपके पास सिलेंडर नहीं आया तो फिर तो कल
बंद करना पड़ेगा मैडम। कल तक सिलेंडर नहीं आएगा तो बंद करना पड़ेगा, रीज़न यही है, उसके अलावा तो कोई ये है ही नहीं।
कई ऐसे दुकानदार हैं जो कह रहे हैं कि हम ब्लैक में भी ट्राई कर रहे हैं, नहीं मिलता।
नहीं, उसके बारे में आइडिया नहीं।
क्योंकि हम जब कस्टमर से बात करें उनका कहना है कि इतना अच्छा खाना मिलता है लेकिन अब नहीं खा पा रहे हैं।
हाँ, तो कारण वही है, गैस नहीं है, कारण वही है, गैस ही नहीं है अपने पास।
आप लोगों को तो नुकसान हो रहा होगा।
नुकसान तो हो रहा है, लेकिन क्या सकते हैं, कारण वही है।
चलिए, हम चाहेंगे कि जल्द से जल्द आपको जो है एलपीजी सिलेंडर मिले, ऐसा जो है ये भी चाह रहे हैं। एंड एट दिस पॉइंट इट इज़ द शॉपकीपर्स एज वेल एज द मैनेजर्स हु आर स्टेटिंग दैट देयर कस्टमर्स हु आर वांटिंग टू कम एंड टेस्ट द टेस्टी फूड दैट द restaurant provides, but Ramashray, one of the most prominent restaurant today, is unable to serve only because of the shortage and the crisis which is being faced of the LPG cylinders on a commercial basis. Also, there have been guidelines that have been given out stating that only after applications will be submitted in, it will be allowed and decided whether commercial cylinders will be provided to these hoteliers or not, and henceforth a crucial time, in fact a very strict time for these hotels as well as the entire hospitality sector at this point, wherein in Mumbai only 50% of the total hotels and restaurants have temporarily stopped their operations, and the impact could be seen clearly on ground where customers are wanting to come in but they are unable to get the food, as well as the restaurant is unable to provide them with their meals.
Alright, then there you go. That's the word coming in as far as Ramashray is concerned. They may have to shut down entirely in terms of operations due to the LPG crisis. But that's all the time that we had on the show. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
In a month that moved markets, shifted diplomacy,
the entire world,
and stirred political battlegrounds, India chose its news carefully. NDTV India and NDTV 24/7. #1 on YouTube. NDTV Network, streaming India's trust. Leading India's conversations.
First India tour in your city. Rag on with Shankar Ehsan Loy and Siddharth Mahadevan and Shivam Mahadevan. 5 times melody, 5 times masti with NDTV Good Times. Go grab your tickets.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Money, fame, dirty money, fame. Spending millions every day, but I still the same.
घंटी बजी जिंगल 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 जिंगल, बस आज का जिंगल 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 जिंगल, चल करें थोड़े जिंगल जिंगल
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you.
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Soumit Sarkar, and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume action. Firstly, let's look at what's on the show today. We'll be speaking with the management of Big Block. Now, the stock is down nearly 31% despite the fact that the company reported its highest EBITDA in the last 6 quarters in the third quarter of FY26. So what's the way forward and what is the growth guidance that the management is giving for FY27 is the key question to ask here. Apart from that, we'll be covering stocks. Firstly, we'll be speaking about HG Infra. The company has won an order worth nearly 401 crore. The stock surged as much as 19.5% at one point of time, which was its biggest move since April 2020. Another stock that we'll be talking today is Urban Smart Space. The stock has been on an uptrend post Firoz Shah Godrej has bought stake in the company from the open market. What could be the rationale behind this purchase is something that we'll discuss on the show today. And if you look at Jal Jeevan stocks, there are a host of stocks that have been gaining. In fact, on the gainer side, most of them are the Jal Jeevan stocks. EMS, Denta Water, Indian Hume, Enviro Infra, Roto Pumps, all have been gaining given the fact that the government has increased the timeline and the budget for Jal Jeevan mission, and these stocks have been gaining on the back of that. And lastly, we'll be also covering KSH International. Now, the stock is up for the 5th trading session. On an intraday basis, it had hit its all-time high. ICICI Securities has initiated a buy rating on this counter today with a target price of 600, which suggests a potential upside of around 45 to 50% in trade. Now, if you look at the markets, the Nifty has given up all the gains that we saw in trade yesterday. It's hovering around that 24,000 mark for the last 1 hour of trade. Not much of an action that we are seeing, at least when it comes to the benchmark. Even on the sectoral side, Nifty Auto is the top sectoral loser, while gainers we have Nifty Pharma and Nifty Energy or the Nifty Oil and Gas pack, which have been on the top gainer side, but on the losing side is Nifty Auto, which has lost the most, down around 2.4%, followed by Nifty Private Index. And also surprisingly, the Nifty Small Cap Index, that has been gaining in trade, which could be largely because of the Jal Jeevan stocks. But Mahima, could you give us in detail which are the stocks that have been buzzing there?
Right, so, as you rightly mentioned, Jal Jeevan mission stocks, sweeping away. You have so many names, for example, EMS Limited locked in upper circuit right now. There's Denta Water, which is also up 15%. Roto Pump is also up 13% as well. The other pack of stocks that's doing fairly well is Apollo Pipes, as well as something like an Electro Steel Casting, which is up 19% and 13% respectively. Regal Resources is also doing fairly well, up 12%. We have Knife, which is up 12% as well. HG Infra. So a couple of infra names also doing fairly well in that space. Office space also doing very well, up 11% as we speak. Oswal Pumps also up 9% as well. Counters like Om Infra also doing fairly well. But on the flip side, counters that are under pressure are systems, which is, kind of continued to stay under pressure, is down 7.8% today as well. There's counters like Ramratna Wires, which is also under pressure. Silver Touch continues to be under pressure, down by about 5% as we speak. Fabtech is also down by about 3% odd. Taj GVK is also seeing some pressure because of this entire war scenario, down 2%, almost 3% as we speak. And lastly, counters like Pearl Poly as well as Premier Polyol is also down by about 2% each. But that's with regards to where the broader end of spectrum or the small cap space goes. But as promised, we're now joined by the management of Big Block. Mohit Sabo, who's the CFO and director of Big Block Construction, is joining us now. Mohit, thank you so much for taking out the time. Mahima, this side, as Somit was mentioning, you've seen a strong volume growth coming in Q3, and this has been one of your best quarters, and it stood at 38%, right? And I wanted to understand that right now, considering that analysts are kind of cautiously optimistic when it comes to private capex picking up, how are you viewing this kind of volume growth to sustain going forward in FY27? Do you still think that you'll be able to grow in that range of 35 to 38% in terms of where volume goes?
So, Mahima, over the last 3 quarters, continuously we have been updating our volume growth, and we have reached a capacity utilization of approximately 65% in Q3, with the highest ever quarterly turnover which we have reported, the highest ever EBITDA in the last 6 months, as you rightly mentioned. And going forward, we keep on intending to increase our capacity utilization across AAC blocks as well as AAC panels, both the segments. So AAC panels being a comparatively new product which we have introduced, which is the single largest panel available in the market, which is a green building material used as a replacement, where the height of the panel is 6 meters. It is lightweight, it's steel reinforced, and very good fire rating.
Okay, if you could just take us through what is your current utilization rate or capacity utilization, and how do you see that improving, how much that can improve, what is your target for FY27?
So, over the last 3 quarters, every quarter we have seen a utilization level from 51% in Q1 to almost 65% in Q3. And we intend to reach 70 to 75% in Q4. And going forward for the entire FY27, we intend to keep a capacity utilization on the upwards of 75%.
Okay, so you're saying that your capacity utilization has been on an improving trend and you're aiming for 74% for FY27. So when you reach 74%, is there more margin upside? Where can we see your EBITDA number to be? Because what I can see here is that your EBITDA number did spike up in the month of for the third quarter. But apart from that, it was quite subdued for the first 2 quarters of FY26.
So for the first 2 quarters of FY26, because of the lower capacity utilization, the EBITDA was quite affected. From Q3 onwards, since we have reached 65% capacity utilization, we have been also able to increase our margins to a little bit. And going forward, as the capacity utilization keeps on improving, our margins will also improve going ahead, thereby taking the EBITDA also a little bit higher. So if we see the EBITDA in Q1 was at around 2-3%, which has gone up to almost 12-13% in Q3. So going forward, we can aim an EBITDA of 15 to 20%.
Mohit, with regards to your realizations, you've seen an increase of around 2 to 3% in Q3, and this is also on an increasing trend, if I'm not wrong. I wanted to understand from a slightly long-term perspective, how do you see this fare? Because for you, if I'm not wrong, raw material prices will be a concern if the war situation continues. So then how do you see this entire thing play out, realizations versus volume growth?
So, obviously the war scenario, the things have been changing dynamically over the last 10 days. But if the war scenario keeps on going on and if we see inflated costs, we are looking at passing on the increased cost to the customers as well.
Okay, and then realization uptick, because you've mentioned that you will further be able to improve your realization. So what is the kind of range that you're looking at in terms of increasing this? Because this will also have, play its part in terms of your top line growth.
So recently in last quarter, as we have seen a 2 to 3% improvement in our margins. That is only because of realization improvement as well as volume improvement. But going forward, if the war situation persists, our input cost goes up, we'll increase the realizations as well as the cost increase will be passed on as well. And the real estate demand as well as entire infra segment, the demand looks quite optimistic. And the government is also doing a lot of capex, whichever was pending since the last 2 to 3 quarters. The government is also taking up all those capex. and we are seeing good demand from the government as well as the private sectors.
Okay, any issues in production that you're seeing because of the gas shortage that we are seeing overall for industries or commercials, anything that impacts you on that front? And you did mention that because of increasing our raw material cost, your cost would increase. By how much would that increase? And if you could give us some number on that front?
So far, in terms of the raw material cost, there has been an increase of almost 3 to 5%, mainly because of the energy cost. We use coal as a source of our energies, and aluminium powder is also one of our raw materials. So because of the war scenario, aluminium prices have also spiked up. But majority of our raw material is pond ash, which is a hazardous waste from the thermal power plants, which is available free of cost to us. So we just have to bear the transportation charges, and so far there has been no impact on the transport or the diesel prices, thankfully, by the government. So till that time, there is not going to be much of a cost escalation for us.
All right. The other aspect, with regards to your recent trial runs on construction chemical facility at Umargaon, just want to understand, because your trial runs have commenced now, and you expect, the production to soon happen. Give us the timeline as to when do you plan that, and when does the actual production start for you in terms of this particular plant?
So for the construction chemicals plant, we intend to start commercial productions probably in the first week of April itself. And for the AAC panels, which we have recently introduced, we are getting a lot of traction from a lot of data centers, from lots of infra projects, the likes of, we have done some mock-ups for the bullet train project as well, which is the dream project for our Honorable Prime Minister. We are also doing some mock-ups for large-scale industrial projects as well.
Okay, so Mohit, what is the kind of revenue that you would be expecting from this segment coming in, let's say, 3 years down the line?
So today we are doing mainly three things. One is AAC blocks, from which the revenue should be in the range of almost 240-50 crores per annum. AAC panels, from which our revenue could go up to almost 70-80 crores per annum. And construction chemicals, again, from which we can get revenues to the tune of almost 60-70 crores per annum. So targeting a top line of almost 400 to 450 crores over the next 2 to 3 years.
Lastly, one question from my side. Just wanted to understand how has been your order inflow growth, but because we have not seen much of pickup when it comes to private capex, but how has been the growth for you overall, and is it more coming from the government side? If you could just give us some color on that front.
So order inflow growth has been improving since the last 3 to 4 months, and it has been improving from private as well as government, both the areas. So when I talk about private, be it real estate players, the likes of Runwal, Sunteck, Adani, PSP, etc., as well as when I talk about the public capex, so government is also doing a lot of capex through the contracts and tenders like Awas Yojana projects or Kanya Shiksha Parishad, police housing projects or Sarva Shiksha Abhiyan projects, which are all government projects, and the government has mandated the use of fly ash blocks or green building materials in those projects. So we are continuously getting repeat orders from that client as well.
Mohit, your next expansion phase for Madhya Pradesh, the capex is going to be in the tune of 75 to 80 odd crores. Any other capex planned? And how are you planning to fund this capex, and what is the timeline for this?
So the capex for the Madhya Pradesh plant, we are planning to do over the next 12 to 15 months to make the plant up and running in FY 27-28. And going ahead, apart from this, we have not yet planned a capex, but we have our thoughts to enter the southern India market by putting up a plant in Tamil Nadu or Karnataka.
All right, Mohit, thank you so much for helping us, answer those questions so candidly, and thank you so much for taking out the time and speaking with us at NDTV Profit.
Thank you so much. Have a good day.
Yeah, you too. So that was the management of Big Block, of course. But with that, let me also welcome in Avinash Gorakshaka, the founder and head of research at Avinash Mentor Research, joining us now. Avinash, a very good afternoon to you, and thank you so much for joining us. Your quick take. I mean, you heard the management probably of Big Block, and as Somit was mentioning earlier as well, volumes have picked up very well. It's been one of the best quarters for them, but the stock is not doing anything, right? It's seen a downhill. What's the view like overall, fundamentally?
No, I think you're right in saying that volumes have picked up. But if you see the last 2-3 quarters, the company has not delivered as per what the market earlier expected. So I think markets are probably looking at maybe another quarter, that is the March quarter and the June quarter, to be equally strong. I think a lot of expectation was built up earlier on this stock, but unfortunately in the past 2 to 3 quarters, I think numbers have not been so great. So I think we'll have to wait for a little bit of more conviction. I think once the March quarter numbers are out, we get a better sense on the kind of volume growth and the kind of raw material kind of scenario. Because as the management pointed out, already 3 to 5% cost increases have happened. Now, how quickly they are able to, get the benefit of the price increase is something which I think we'll have to wait and watch. So I think after the March quarter, hopefully, if this war ends and things get back to normal, then I think you could see a gradual kind of uptrend in the stock. So I think long term, yes, this business is going to grow rapidly. The management also has a very strong bandwidth in this business. But in the near term, these challenges will continue. So I think it's a hold. We'll prefer to wait for the March quarter and then wait for the commentary, post the quarter 4.
Consistency in financial performance is something that could lead to re-rating in the counter. Shifting focus, let's get in Sharad to understand what's been buzzing on the F&O side given the fact that the market is down nearly 300 points in trade.
Well, thanks a lot for that, Somit. And we see largely yesterday's gains have been wiped off by the markets, and this definitely BankX is showing a big downtake. Bajaj Twins, M&M, and you could see even the HDFC Bank and ICICI Bank also. So FI heavy counters are seeing a good sell-off. NTPC, Sun Pharma, Power Grid, that's where a little bit of respite is there, but nevertheless the sell-off has intensified and key levels are being tested again for both Sensex and BankX as well. Let's look at the stock specific moves also, where the overall action is. Long build-up coming in for Blue Star and Nalco. Of course, the AC related stocks are doing well in the trade, good buying coming in this segment. But looking at the short covering candidates, this is Oil India and Samman Capital. And the long unwinding names, let's see what's there over here. We'll have a good amount of sell-off here. Muthoot Finance, that's down 3.5%. And Marico also, that's also we are seeing a good sell-off happening. Shorts build up, that's of course Colgate. That sell-off has intensified. It's down almost 6%. And cable wire stocks also are taking a beating, especially on concerns on a weaker Q4 as well. So sector-specific moves are definitely happening in the market, but the sentiment is turning bearish for both BankX and Sensex.
All right, so that's the view with regards to where the F&O space is concerned. But moving on and talking about the other small caps stock that we're putting spotlight on is HG Infra. Now, this stock has been in focus on the back of an order win, and we have Puneet joining by to give us more perspective on this one. Puneet, over to you.
Well, thank you for that. It's been a big day of returns today for the counter, up almost 10% now and was almost up 19% at one point of time. This is also on the back of an order win of almost 401 crores that the company has reported, but largely the biggest move since April of 2020 in just this one single day. The returns are something to watch out for because, stocks down almost 56% from the highs of 1,200 rupees in the last 1 year itself. Now, order win comes at the back of another order win that the company reported at the end of February of almost 1,582 crores. So almost 2,000 crores of order win in just a couple of weeks. And when you also look at the order book position of the company at the end of quarter 3, roughly around 3,300 crores of orders that they won in quarter 3 itself, which takes the net total to almost 13,000 crores that the company has won till December of 2025 or till the end of quarter 3. So it has been a robust year of order inflows, but unfortunately that hasn't translated in the financials, and hence we've seen an impact on the stock on the back of either valuation concerns or on weak financial performance as well. Now, specifically, management had earlier guided that they expected roughly 4,000 to 5,000 crores of orders inflow by March of 26. So we could see still some more announcements over the next 20 days, but they have largely remained in the roads and highway segment, which contributes 63% of the total order wins, but railways from 20% and battery projects from 12% of the company's incremental order wins as of now. So of the 13,000 crore order book, that is the top 3 segments. But you have to look at the financials as well along with the order book, and that has been weak. In quarter 3, revenue was down 4%, but the EBITDA and largely led by slower execution caused by delays for the company that they had mentioned. But specifically, EBITDA was down 10% and profits were down 29% for quarter 3. So investors will be watching out for quarter 4 essentially in terms of earnings to end this year positively. Axis Securities maintains a positive view given the valuations are very lucrative according to them. They've highlighted that they have a buy rating with a target price of 970 which is a substantial upside from here. But you have to measure as an investor the order book positioning going into financials, and both those aspects we've highlighted in this segment.
All right, Puneet, thank you so much for giving us that comprehensive perspective on HG Infra. Avinash, your quick view on this one. As Puneet was mentioning, I think the order inflow is not kind of getting translated into the top line. But having said that, it's one of the cheapest players available in the infra space right now.
Yeah, I think clearly, the valuation comfort is there, but unfortunately, execution has been very weak. Q3 was a very poor quarter. I think the market should also like a strong jump in revenue as well as the profit. I think if you look at the EBITDA, it got impacted negatively. The top line also was not even in double digits. So my sense is, the markets in these kind of cases would prefer to definitely see how much execution happens out of these orders. The new order win is definitely a big positive. I think investors who can probably take a slightly longer term call of say next 12 to 18 months can definitely take a small kind of exposure at the current level. But I think the markets would obviously give the stock a big re-rating once the Q4 number is out and the numbers are much better than the Q3. So I think it's a wait and watch. Our sense is that in these kind of companies, I think once the execution improves, then the re-rating will happen. So it's a hold from our side. I think aggressive investors who want to take a position can take a small position, but obviously the Q4 will be very crucial for future re-rating going ahead.
Right. Let's get in Sharad. Sharad, they have been talking about the Jal Jeevan mission. I believe is one of the reasons why Nifty small cap is actually outperforming. All of the top gainers when it comes to the small cap stocks are related to Jal Jeevan stocks. So what has changed really here?
Actually, you're right, Soumit. The top 20-30 gainers are coming in from this segment. A very important update for Jal Jeevan Mission 2.0. Of course, there's an extension of that. We already know about the key details, but the stocks which should be in your radar, especially in the small cap names, the water infra, this includes, of course, EMS, Ramki Infra, Enviro Infra, Concord, Environ, Ion Exchange, Denta Water, it's of course a micro cap, Jash Infra, SPL Infra, Vishnu Prakash Pungalia, and even SEPC. These are the stocks which are doing really well in trade. But if you go a bit deeper into it, the pipe segment, we have Prince Pipes, we have Indian Hume Pipes, High Tech Pipes. These stocks are also doing really well in the trade. Apart from that, the pumps, the solar pump angle is also there, where KSB pumps and even Oswal pump stocks are buzzing in the small cap and the mid cap space.
Okay, all right. Sharad, thank you so much for getting us those details. Avinash, your quick view on this entire pack of stocks.
No, I think it will definitely be kind of a positive sentimental driver. I think more business should come in FY 26-27. And I think for a very long period, these companies were beaten down because earlier the government had actually reduced the Jal Jeevan kind of, expansion kind of budget. But now with this new program initiative, I think you could see a stronger performance in FY 27. I think we are looking at companies like Vatek, EMS, or maybe Electro Steel Castings, which are very solid companies in this space. So definitely, I think you could expect significant amount of re-rating, hopefully once the orders are announced and the execution takes off. So I think Electro Steel Casting is down by almost 80-90%. EMS is also down. So this could be a good kind of an entry point for investors who want to take an exposure for the next 12 to 15 months. Once numbers come in, I think the stocks could be further re-rated.
Right. Arvind Smart Spaces is another counter that remains in focus given the fact that Firoz Shah Godrej, who also has one of his own company, Godrej Properties, is looking or has bought stake in open market in this company. What could be the rationale behind this purchase? Let's get in part to understand more details on that.
So Arvind Smart Spaces is back in news today. This time because they have acquired a new project in Whitefield, Bengaluru. In this project, they have a total sellable area of more than 2.5 million square feet with a revenue potential of more than 330 crores. This is actually their third project addition in Bengaluru this year, and it has taken their business potential to more than 2,840 crores. The stock might be flat today, but yesterday the stock was up more than 15% due to a bulk deal by Firoz Shah Godrej. Firoz Shah Godrej is the executive chairman of Godrej Properties, and he acquired more than 8.17 lakh shares in the company from HDFC Capital Real Estate Fund at a price of 498 rupees per share. So with smart money investments pouring in and a robust pipeline ready across key urban markets, Arvind Smart Spaces has now positioned itself for the next leg of growth.
Right. Avinash, any view on Arvind Smart Spaces here, given the fact that Firoz Shah Godrej has bought stake from the open market? Does it lead to more investor interest here?
I think definitely this is a large investor, Sumit, so definitely there is going to be some positive interest on the stock. But I think, the most important thing is I think the market wants to look at better execution and better kind of numbers, in the fourth quarter. Typically, October to March season is a very strong quarter for real estate companies. So I think we'll have to see at these numbers. The stock is definitely looking attractive, but only for those investors who can take a 6 to 12 month time frame and then only look at numbers. Unfortunately, the stock has not been doing well, at least in the last few months. So I think only those investors who have got a slightly longer term horizon can take a investment kind of time frame of this period and stay invested. I think existing holders can hold on.
Okay, all right. So that's the view on Arvind Smart Spaces. With that, Avinash, thank you so much for taking out the time and helping us with all those small cap stocks. We are completely out of time on this edition of Small Cap Buzzers, but do stay tuned. Ask Profit up next.